Good evening, good evening to one and all virtually present here. Myself, Dodangoda Patil, Secretary of Sikasa ICA Bengaluru. I heartily welcome you all, one and all, live webcast and recap discussion on November 2020 RTP on advanced audit and professional ethics. Now, I would like to welcome our Sikasa chairman, Bengaluru branch Sikasa chairman, our CA Panindra Gupta sir. Welcome to the session, sir.
Thank you, Pat.
And our today's speaker is always like a pilot, like a air chief marshal for all the students who are soldiers who are going to take examinations. And he's a Vikas Oswal, sir, CA Vikas Oswal. He's basically from Bangalore and he's a fellow member of ICI and is a faculty for auditing. And he has been teaching auditing for a CA final and CA inter students from past 18 years. And Sir has taught practically at all the SIRC branches of ICI and is currently teaching at Bangalore branch for CA Inter and CA Final as well. He is also a regular speaker at various seminars conducted by Bangalore branch of ICI, and he has also conducted various study circles programs for CA members across the South India. And he also authored, he also authored simplified approach to auditing and assurance for a CA final and CA IPCC and CA final. And this with this brief introduction, and I would like to welcome our today's speaker, CA Vikas Oswal, sir. Welcome to the session, sir.
Thank you, Dodangoda Patil. Thank you very much, actually, for that warm welcome. And thank you, as usual, Panindra, who is very much concerned about the students. I really appreciate that the kind of program Sikasa is doing for students. It is always for the welfare of the students. Now, first of all, my dear soldiers, I'll start the process because this is such a unique program whereby we are discussing the November to 2020 RTP, which is a very good effort made by Sikasa, which is like, say, focusing on relevance and importance of the topic. Okay, so I'll take up the topic as important wise. I'll highlight the topic to you, and then we will take the discussion on it. I'll divide the topics into like
Sir, 1 second. So let me welcome you also for today's session before I hand it over. Yeah. So happy evening and a warm welcome to all the students for today's session. So recap discussion on November 2020 RTP, Advanced Accounting and Professional Ethics. So on behalf of Sikasa Bengaluru, I take this opportunity to welcome our today's speaker, CA Vikas Oswal sir and my beloved guru. So whenever we invite you for Bangalore branch to take up any session, be it for members or students, so you wholeheartedly accept our invite, sir. So thank you so much for accepting our today's invite also. So I welcome you for today's session, sir.
Kind of you, Panindra. Okay, yeah. Thank you very much. Thank you very much, Panindra, for giving such a warm welcome. So I was telling you, my dear soldiers, that this is a very unique approach whereby we have a relevance direction towards the examination as to what is very important, which we should be aware, and what are the different types of question which we may get in the examination. So taking this opportunity from Sikasa, let me start sharing the important aspect of the questions. Let me start with you guys, actually. First of all, my dear soldiers, as I highlight this discussion on November 2020 examination, what I have done is that I have taken not only November 2020 RTP question, but also taken May 2020 RTP question and some important mock test paper question also have highlighted so that your understanding becomes more clearer, focus becomes more clearer actually from the examination. Okay. So that is the first thing. So first, my dear soldiers, we will focus on the questions which are coming from the standards on auditing. Now, one very favorite question of examiner is enumerate the factors to be considered for outsourcing in case of financial reporting. Then another second question, assessment of services provided by the service organization. And third one, my dear soldiers, is the sub-service organization. Now, if you take up these questions, my dear soldiers, these questions are related to SA 402. So, where audit consideration in relation to entity using the service organization. Okay, so this topic is very much important. This standard SA 402 is very much important. 402, what does it say? There will be a user entity. The user entity will outsource. My humble request to all the students is that as I explain the concept, please keep scribbling. This PPT will be made available to you. It is only for you guys, but you please keep scribbling, my dear soldiers. Okay. So the user entity will outsource the like say their any functions to a service organization. So the, for example, say user entity could be any company. They want to outsource their payroll. They want to outsource their accounts. So they may either partially outsource or they may completely outsource to a service organization. Now, when I say service organization, this is nothing but BPO, business process outsourcing. For example, Accenture is the best example for a service organization. So when a user entity outsources, it accounts to service organization. So now this service organization can further outsource the activity to another sub-service organization. Why are we outsourcing? Why the company is outsourcing? One, they want to focus in their core area. Example, Airtel outsourced their operation to IBM. So Airtel wanted to focus on the important areas actually. So they just wanted to focus on that. They wanted to focus on marketing, on expansion, whereas IBM is into technology. Similarly, say there will be some certain companies which will be outsourcing their accounts to Accenture. So now, this service organization will outsource further to sub-service organization. Okay, so this is the situation. So you have a user auditor. So user auditor of the user entity. See, for example, user entity maybe say Airtel. They outsource to IBM. So now you have a user auditor. The user auditor is outsourcing. User entity is outsourcing to service organization. So now you have a user auditor. Similarly, for service organization, you will have a service auditor. So there'll be a service auditor for the service organization. Okay, so a service auditor for the service organization and user auditor for the user entity. This is how it works actually. Okay, so now in this case, what happens is that this standard SA 402, you will study from the point of view of the user auditor. It is purely from the point of view of the user auditor you're going to study. That is the first and the foremost thing you need to understand, that we are studying this standard purely from the point of view of SA user auditor. See, ultimately, what is standards on auditing? They will teach they will always teach us as an auditor as to how to conduct an independent audit. How an independent audit has to be conducted is taught by, my dear soldiers, the uh, basically, my dear soldiers, the uh, uh, by the standards on auditing. So here, the user auditor is taking the help of SA 402 in case of user entity when they outsource their operation. So whenever in examination, the question starts with outsourcing, then in such case, straight away you should go to SA 402. Here, what is the factors you should consider when outsourcing in case of the financial reporting? What you should consider? First of all, my dear soldiers, the classes of transaction processed. You will consider the classes of transaction processed. Then procedures followed for initiation, recording, processing, correcting, transferring, reporting the transaction. Procedure followed for initiation, recording, processing, correcting, transferring, reporting. Then accounting records used for initiation, recording, processing, and reporting of the transaction. And then, my dear soldiers, you will also take into account the control over journal entries. What is the control over journal entries? Please keep scribbling actually. So control over journal entries. What is the control over journal entries to be considered? And financial reporting process. You have to consider the financial reporting process. And lastly, my dear soldiers, you should also consider how transaction and events are captured in the user entity. So first thing, when they are going for outsourcing, you have to consider all those things. What is the classes of transaction which are being processed at user entity, at service organization? Sometimes it may be completely or partly. Second one, what is the procedure followed for initiation, recording, processing, correcting, transferring, reporting the transaction? Accounting records used for initiation, recording, processing, and rectifying the transaction. Control over journal entries, financial reporting process, and lastly, my dear soldiers, it also deals with the basic thing. Basically, what happens is that in how the transaction in events are captured, all these things are highlighted. Then next one, the next question is can be assessment of services provided by the service organization. Now, when I say assessment of services which are provided by the service organization, how do you go about it? What is the parameter you will consider about it when you say assessment of services by service organization? So, and also there is a sub-service organization also coming into picture. So, how do you deal with this actually? Now, the question may be based on this. See what happens. It's very simple answer. Very simple answer. First of all, you have to understand that the nature of services provided by the service organization. Second one, my dear soldiers, you should also understand very clearly the nature and the materiality of the transaction processed. What is the nature and materiality of the transaction processed by the service organization? Then relationship, nature of relationship between the user entity and the service organization. So you have to consider the nature of relationship between the user entity and the service organization, and you will also consider the degree of interaction between the user entity and the service organization. That's the thing. So what is the degree of interaction between the user entity and the service organization? These are the things you need to understand here. First of all, the nature of services provided by the service organization. Second one, the nature and the materiality of the transaction which is processed. The third one, nature of relationship between the user entity and the service organization. The degree of interaction between the user entity and the service organization. You have to consider that actually. So these are the certain pointers you have to highlight. Then what is the significance of transaction which is being processed? That you have to see, is it material? For example, the user entity has outsourced security services to service organization. Now it does not have any impact on financial reporting, at least directly there will be no impact. So in such case you may not consider it as a significant. And next one, internal control. What is the internal control? You have to understand that, and also you have to understand the service organization by reading the user manual. You have to read the technical manual, system overview. So you have to consider all those things, system overview, and you have to consider the service auditors report, internal auditors report. So you have to highlight this. And my dear soldiers, suppose say if the service auditor is unable to understand, if he is unable to understand the service organization, suppose he is not able to get a clarity, then in such case he should consider the type 1 and type 2 report issued by the service auditor. So service auditor will issue a type 1 and the type 2 report. Now, type 1 report, my dear soldiers, understand that type 1 report are those audit report. Basically, they are for design and description of internal control. So it is the service auditor who is going to issue the type 1 and the type 2 report. They are the people who are going to issue this report, that is type 1 and type 2 report. Type 1 report is on design and description of the internal control of the service organization. Whereas type 2 report is on design, description, and operating effectiveness of internal control of the service organization. So you have to see the type 1 and type 2 report. Sometimes they have asked question on short notes on type 1 and type 2 report. Then if you are not able to understand, then you have to contact the service organization, and you have to visit the service organization. or you have to engage another auditor. You have to engage another auditor for this purpose. You engage another auditor for this purposes actually here. In examination, what they may do, they may twist a question. They may add that, okay, suppose say if the services are used by sub-service organization, suppose say if sub-service organization is providing services, what will you do? So in such case, the same answer, but additionally you have to add sub-service organization. That's it. For every sentence, you have to add sub-service organization. That's it. For example, nature of services provided by service organization or sub-service organization, nature and materiality of the transaction processed by service organization or sub-service organization, nature of relationship between user entity, service organization, and sub-service organization. So, see, for example, I'm giving a hypothetical situation. Airtel will outsource to IBM. IBM will outsource to, say, TCS. Suppose, say. So, in such case, what happens? TCS will become sub-service organization. So, here the same answer, but you need to add the word, what, my dear soldiers, the sub-service organization. That is the thing you need to add here. Okay. 402 is one of the very important standards. Now, in November RTP 2020, a brand new question they have given. This, I can say, it's a brand new question on SA 402. So this question has never appeared before. So it's a high potential, and we need to read this question. We need to go through this question actually here. What this question is highlighting: N Limited is availing services of App Private Limited for its payroll operation. If you read this question, I think they have used the word, yes, outsource. They have used the word. So moment you see outsource, it is 402. In the question itself, he has given 402. Okay. Now the payroll cost accounts for 65% of total cost of N Limited. So N Limited will be what? It will be the user entity. App Private Limited will be the service organization, and what their nature of services is the payroll operation. 65% means it is a significant transaction. App Limited has provided type 2 report. Now, what is type 2 report, my dear soldiers? I told you this, it is dealing with what? Come on. Type 2 report is design, description, design, and operating effectiveness of internal control. So description, design, and operating effectiveness of control. App Private Limited also outsourced material part of payroll operation to export Messrs SMP Associates in such a way that Messrs SMP is a sub-service organization to N Limited. So now you are also having a sub-service organization. So basically SMP will be the SSO, sub-service organization. Type 2 report which was provided by App Private Limited is based on carve-out method as specified in the 402. Now, CA Raman, while reviewing the unmodified audit report drafted by his assistant, found a reference to the work done by service audit has been made. CA Raman hence asked his assistant to remove such a reference and modify the report accordingly. Comment whether CA Raman is correct in giving the reference to the work done by the service auditor. So this is the part, this is a new question is asking. What has happened? They have issued a draft report, and after issuing the draft report, what has happened? They have given an unmodified report. But the auditor, the principal auditor, he says that unmodified report should not be given. You should not be giving a unmodified report. Unmodified report must not be given. And that is what they highlight, that don't give any unmodified report because you should not give any reference to the work done by the service auditor. Now, first of all, as a user auditor, can I give reference to the work of the service auditor? See, please understand that we use the work of internal auditor SA 610, we give reliance. We use the work of the branch auditor or other auditor under SA 600. We use the work of expert, we take the help of expert under SA 620. In 402, when I'm relying upon the work of service auditor, can I say, okay, I've relied upon the work of service auditor? Answer is no. No reference should be made to the work of the service auditor. It should not be done. It must not be done, my dear soldiers. So no reference should be given actually here. That's the thing. So, my dear soldiers, the standard does not require you to give any reference to the work done by the service auditor. It is not at all required. So, CA Raman is correct in removing the reference, See, ultimately, you have to highlight the basic principle. The auditor must obtain SAI. He has to obtain SAI while expressing his opinion on the financial statement. So now what happens in this case? The auditor, when he gives reference, it is incorrect. So if he is not able to obtain a SAI, then auditor has to give a modified report. That is how you should highlight it actually while writing the answer. So CA Raman is correct. No reference should be given to the audit report of the service auditor. That's it. It can be a part of your audit documentation, but it should not be a main part of the audit report. At the end of the day, it is a user auditor who is responsible for giving his opinion on the financial statement. Okay, this is the first thing. November 2020 RTP question. The answer here we have highlighted actually here. That's the thing. So highlighted for you. So we have to give a modified opinion, as I highlighted, that if we are not able to obtain SAI, the last line, CA Raman in removing the reference of the work done by service auditor is in order. Okay, so the question answers are there actually. You can refer this PPT. You don't have to worry, but you understand what is the expectation. This is a brand new question. First time they're asking this question. They were going to sub-service auditor, but now what they have done, they're giving a question on reporting, which is a very good question they have asked. So please be thorough with the answer in the examination. Okay, fine, fantastic. Now let's go to the next question. Question number 5. I chose November 19 RTP question. I've chosen that question. This question I will read out actually for you. MNO Limited is one of the prominent players in the chemical industry. Why I chose this question? It's again a brand new question, my dear soldiers. So high potential. The company is a public company and domiciled in India and listed on BSE, NSE. So we are talking about MNO Limited. Okay, fine. It's a chemical industry. Company is facing extreme liquidity constraints, and there are multiple indicators that cast a doubt over company's ability to continue as a going concern. Company's ability to continue as a going concern. Now, company was led into insolvency proceeding by consortium of bank led by PNB, and the NCLT ordered commencement of corporate insolvency process. So they said, okay, you start the corporate insolvency process from 31st August. The company invited prospective lenders, investor, others to submit their resolution plan to resolution professional, and resolution professional reviewed the resolution plan and ensured that it is in conformity with the insolvency and bankruptcy code. If you see this question, going concern, so straight away it is giving link to SA 570, going concern, my dear. So just SA 570, going concern. Compliant plans were presented to Committee on Creditors on 2nd February, and resolution plans were submitted by PQR Limited. Now was evaluated by as highest evaluated compliant resolution plan, and the Committee of Creditors of MNO Limited approved the resolution plan. Approval of NCLT was finally obtained on 4th May 2019. PQR Limited submitted a detailed plan and commitment as a part of resolution plan, including clearance of all outstanding debts, and which is leading to negative cash flow. So please suggest how will you deal with the situation as an auditor of MNO Limited actually. So that is the thing. Any question, most of the question, if you see, they will be answering that. They'll be asking you as an auditor, what will you do? One secret I would like to share is that whenever you're reading standards on auditing, you please focus more on the responsibility of auditor. See, suppose if you don't have time, and if you don't have time, then in such case, straight away take up the questions on the standards on auditing, my dear soldiers. Straight away take up those questions. That's the thing. So that is what you should be doing actually. So if no time, take up responsibility of auditor, because the question will be like that. As an auditor, what will you do? As an auditor, how will you deal with the situation? So this is the question. See, but what is happening? It is the question is little bit twist. Why it is twist? Generally, earlier what was happening? The company's financial condition is not good. What will you do? So we were telling about going concern assumption, but now he's talking about, my dear soldiers, revival plan. Revival plan. So this is a new typical question which they have asked, that there is a revival plan. If there is a revival plan, what will you do? Company's financial condition is not good. But if they are having a revival plan, what will you do actually? So first of all, my dear soldiers, the first basic thing is that the auditor must obtain SAI, sufficient and appropriate audit evidence. Auditor must obtain sufficient and appropriate audit evidence as to material uncertainty in relation to events and condition that causes significant doubt over going concern assumption. I repeat, auditor must obtain SAI as to material uncertainty in relation to events and condition that causes significant doubt over going concern assumption. Second one, the auditor must obtain SAI. Auditor must obtain SAI as to the appropriateness of management use of going concern assumption in the preparation of financial statement. So second point, auditor must obtain SAI as to appropriateness of management use of going concern assumption in the preparation of financial statement. Then who has to make the assessment whether the going concern assumption is appropriate or not? Who has to make an assessment? The person who has to make an assessment that the going concern assumption is appropriate or not, it is the management. So the management has to make a assessment. They have to make an assessment of GCA. Keep scribbling keywords. Now, if the management has not done any assessment of GCA. So suppose say the management has not done the assessment of GCA, then in such case, my dear soldiers, what you should be doing. So suppose say they have not done the assessment of the going concern assumption. Suppose say it is not being done. Then in such case, my dear soldiers, suppose say management has not done the assessment, then we have to request the management that please do an assessment. Please do an assessment. You have to do an assessment that about the appropriateness of going concern assumption, requesting the management to do assumption. Then we have to see the cash flow statement. We have to see the future plan of the entity. Whether it is feasible. So whatever plan that PQR is submitting, is it feasible in nature? Whether it can be implemented. You have to see the cash flow. What is going to be the cash flow in future? And also, my dear soldiers, yes, okay, whether it is feasible in nature. And also, as I told you, the cash flow has to be checked. Cash flow has to be examined, my dear soldiers. That is another important thing that has to be highlighted actually. So what is the cash flow? That also has to be ascertained. And also you have to obtain a management representation letter or written representation from management as per SA 580 as to the appropriateness of going concern assumption, the feasibility of the plan. So you have to evaluate the plan which is submitted by the management. This is how you have to address this question. Okay. So focus on the responsibility of the auditor under SA 570 going concern. Okay. Fine. I hope you are clear with this. Then the answer here is highlighted here actually. So you have to request the management to make assessment of going concern assumption, evaluate the management future plan of action, cash flow, and I was telling you about the written representation which is made by the management. So this is the answer which is highlighted here. Okay. Then next one, May 2020 mock test paper question on standards on auditing. Another important question. Choti Limited had definite plan of business being closed within the short period of time from a close of accounting period on 31st March 2019. So they have a definite plan of closing the business. So definite plan of closing the business. So here itself, what happens when they have a definite plan to close the business, then what happens? SA 570 going concern. So if the going concern is affected, then you have to prepare the accounts on realization basis or cash basis. So you have to prepare the accounts on realization basis or cash basis. That's the thing. Okay. So here it says there's a definite plan. And the business is being closed. Now, next line. The financial statement for the year ended 31st March 2019 had been prepared on the same basis as it has been prepared for the earlier periods, with an additional note that the business of the company shall cease in near future and the assets shall be disposed of in accordance with the plan of disposal as decided by the management. Fine. So they are very clear that they will stop the business, they will dispose of the asset. The statutory auditor indicated this aspect in key audit matter only by a reference, only by giving a reference of possible cessation of business, and making of adjustment should be done at the time of cessation. So what they did, the statutory auditor, he just referred this in key audit matter. Key audit matter under SA 701. Key audit matter are those matters which, as per the judgment of the auditor, are significant in the audit of current period financial statement. Now he's just giving a mere reference. He says, I will do adjustment when I do the actual disposal. An actual disposal happens, when actual cessation happens, then I will do the adjustment. Now the adjustment is not required. Now let us not do any kind of adjustment. Is it acceptable, soldier? It is acceptable. Can you accept this kind of thing actually here? So this case, my dear soldiers, definitely it is not acceptable. Definitely it does not stand to be acceptable. Can you just give a mere reference when you are sure shot that the company is not going to continue in the future? Then in such case, my dear soldiers, you have to prepare the financial statement. You have to make an adjustment in that period only, not when actual cessation happens. So now the treatment by the company is not correct. So when you're writing the answer, first of all, you again give the reference to the responsibility of auditor. First of all, auditor must obtain SAI as to material uncertainty in relation to events and condition that causes significant doubt over going concern assumption, and he should obtain SAI as to the appropriateness of going concern assumption, of appropriateness of management use of going concern assumption in the preparation and presentation of the financial statement. So you have to highlight the same thing, actually, responsibility of auditor. Here, when they are sure, then they should have prepared the financial statement on realization basis. Just giving reference in key audit matter is not correct. The treatment by the statutory auditor is not correct. They should have done the adjustment then only. They should have done adjustment as on 31st March 2019 only, not subsequent. That is what you have to highlight here. Okay, fine. Now let me go to the next question. November 19 RTP question. Now, November 19 RTP question. My dear soldiers, your firm has been appointed as a statutory auditor of GBM Private Limited for 1819. While verification of company's inventory as on 31st March 2019, so he is asking that company's verification of inventory, you found that significant amount of inventory belonging to company are held by the third parties. So there are majority of inventory is lying with the third party. However, company has kept all the records of inventory maintained by the third party. What is your duty as an auditor to ensure that third party are not such with whom the stock should have not held, and stock as disclosed by the company records actually belongs to them actually? So now, my dear soldiers, so he's asking a question on inventory. Now, this is a standard SA 501. SA 501, my dear soldiers, audit evidence, special consideration. So I repeat again, audit evidence, special consideration. When I say audit evidence, special consideration, you have to keep three things in mind actually here. So I repeat again one more time, audit evidence, special consideration. Okay, that's the thing. So SA 501, audit evidence, special consideration. So when we say audit evidence, special consideration, three things. What are the three things? You keep it in mind. Let us try to understand here. The first and the foremost thing, my dear soldiers, when we talk about audit evidence, that's what you call it as a special consideration. What are the factors you will consider actually here? That is the thing. So see, this standard deals with existence and condition of inventory, then claims and litigation, and segment reporting. So this question is based on existence and condition of on inventory. Okay, very, very important. 501 is one of the favorite standards. And when you're reading the standards on auditing also, you start from reverse. You don't start from the beginning. You start from 700 series standard. You then finish 500 series standard. You then finish 400, no, not 400, 600 series standard. Then you finish 400. Then you go to 300. Then you go to 200. So whenever you're reading standards, it should always be from reverse. because what you will read about 200 is 200 is also important. I don't say it is not important, but you will be tested at a higher level standard. First is 700, 500, then 600, 400, 300, 200. If you see, majority of the questions will be along 500, 700. That is a thing. So I don't say that neglect 200 series standard. I don't say that. But weightage wise, you go that way. Preparation wise, you go that way. Second thing, in any standard you read, you see what is the responsibility of auditor. Here also is asking that what is your duty as an auditor? What is your duty as an auditor? How as an auditor you will deal? So if you are really pressed with time, you don't have time, straight away go and read the responsibility of auditor. Okay. So this some of the tips you should keep in mind when you're preparing the standards. Actually, in the last moment, when there is a paucity of time, definitely. Here, inventory is lying with a third party. Straight away, he's giving that. What we should do, either we should obtain a SAI about existence and condition of inventory by physically being present in physical inventory counting at the third party, or you should send another auditor. So either you should be physically present with the physical inventory counting with the third party. That is the first thing auditor can do. Or he can use the work of another auditor. There may be another auditor who may be doing a physical count. Or you may obtain a external confirmation. You may obtain a external confirmation. You may also obtain a written representation about the inventory. That is how your answer should be. So the auditor must obtain SAI about the existence and condition of inventory by physical inventory counting. So he should be physically be present at the third party. Second one, if he may also use the audit report which is issued by another auditor, or obtain a confirmation from the third party that they are actually holding the inventory, it is lying with them, and also a written representation from the management under SA 580. This is how you have to answer. Okay, this is the question on SA 501. So here, my dear soldiers, it is highlighted. The answer is given, my dear soldiers. That's the thing. So as I told you, attending the physical count of inventory or using the work of another auditor, you can do it. Or, my dear soldiers, you request for confirmation. Same thing is highlighted here. Okay, that's what SA 501. Then May 2020 RTP question. Now, May 2020 RTP question, what does it say? RIM Private Limited is engaged in the business of manufacturing of water bottles and is experiencing significant increase in turnover year-on-year basis. During the financial year, as on 31st March 2019, the company carried out a detailed physical verification of its inventory and property, plant, and equipment. You are the auditor of RIM Private Limited. The inventory as on year end was 2.25 crores. Moment he talks about inventory, your mind should go to SA 501. SA 501 audit consideration, specific consideration, special consideration. So now due to unavoidable circumstances, my dear soldiers, you could not be present at the time of annual physical verification. Okay, so under the above circumstances, how would you ensure that physical verification is conducted by the management was in order? Now, this is another question coming on 501. Again, one of the favorite standards of the examiner actually here. So May 2020 RTP is saying that suppose if you're not able to go for physical count. So what in such case you should do? You should do a reconciliation of the inventory. You have to do a physical count of inventory on a subsequent date. You have to obtain a written representation under SA 580. So, but give reference to main standard SA 501 first of all. So you have to give reconciliation of inventory. So what is the inventory as on the date of the financial statement and the date of physical inventory counting of inventory? So and the date of financial statement, that is balance sheet date, and as on the physical count of inventory, suppose say on that day you could not go. So what is the, you have to see the reconciliation, and you have to also apply alternate audit procedures. For example, you have to see what are the sales which have been made subsequently, or what are the purchases which are made in the last week. So you have to go for this. You have to go for indirect indicators. See, for example, 31st March inventory, you should see, okay, in the last week of the March, how much inventory has been purchased. What is the inventory that is purchased? That's the thing. And again, my dear soldiers, as I told you, SA 580 written representation, SA 580 written representation should also be taken into consideration. So these are the certain pointers you have to highlight actually here. Okay, my dear soldiers. So these are the certain things, parameters you have to understand about the physical count of inventory. Okay, clear? So you have to give reference to SA 501. So here we have highlighted the answer, my dear soldiers. So same thing, it is highlighting about alternate audit procedures, reconciliation, and also obtaining a written representation from the management, my dear soldiers. That's the thing. That's how you have to highlight it actually. Okay. Then next one. Next question. November 19 RTP question. So November 19 RTP question. What does it say? Ram Kapoor, a chartered accountant, has been appointed as a statutory auditor of XYZ Private Limited for the audit of their financial statement for the year 1819. The company has mentioned in the audit terms that they will not be able to provide internal audit reports to Mr. Ram during the course of audit, and company also imposed some limitation on the scope of audit. They'll say we will not give you internal audit report. They'll not give you there's a limitation on the scope of audit. What are the preconditions of Mr. Ram to ensure before accepting or refusing the proposal, and advise whether Mr. Ram should accept the proposed audit engagement? Many students have seen during the test what they will do. They will straight away give reference to SA 610. SA 610 using the work of internal auditor. Straight away they will go to that. So these are all kind of deflectors they are using. But here, if you see the question, what are the preconditions to audit? So now when preconditions to audit means you have to give reference to SA 210, agreeing to the terms of audit engagement. SA 210, agreeing to the terms of audit engagement. So he's asking a very straightforward question. This question is very simple, but first time they have asked this question, and they have never asked this question in examination. So a high potential question. And this question has a high chance of creating confusion because you may go and give reference to internal audit. So he's asking what are the preconditions for audit. So SA 210, from SA 210 is raising the question. Now, in this case, my dear soldiers, what are the preconditions? First of all, whether the applicable financial reporting framework, whether it is acceptable or not. Is it acceptable or not? That you have to check. So applicable financial reporting framework means accounting standard. Then management is responsible for certain things. First of all, to prepare financial statement as per AFRF, that is applicable financial reporting framework. Then what else the management is responsible? The management is responsible for DIM IC, design, implement, maintain internal control. So management is responsible for DIM IC. These are the preconditions. Preconditions means unless and until these conditions are accepted by management, then only I can take up the audit. Otherwise, I cannot take up the audit. I cannot do the audit at all. So that is what we have to understand by the preconditions to audit. That's the thing. And next one, my dear soldiers, the third thing, what happens is that, so as I told you, preparation of financial statement as per AFRF, then design, implementation, and maintenance of internal control. So this is the first point. Second point, these are the sub points. Now, third main point, the management is responsible. The management is responsible. Management is responsible for three things. There are three things the management is responsible for. What are the three things the management stands to be responsible? So it is so first of all, to provide access to books and records. So they have to provide access to books and records. Then next one, my dear soldiers, to provide unrestricted access. I repeat, to provide unrestricted access. So to any person within the organization who can provide us the audit evidence. So to provide unrestricted access to person who can provide audit evidence. And next one, to provide additional information. So to provide any additional information. So that is also highlighted actually. So this is a question coming on SA 210. Very straightforward question, throwaway question, I can presume it actually. And the question is also asking at the end whether Ram should accept the proposed audit engagement. No, he should not accept because he is creating a limitation on audit. The auditor should not accept any limitation, any limited purpose engagement where limitation is imposed on audit. He should not at all accept such kind of engagement. It is not at all acceptable. So that kind of audit should not be accepted. And auditor should withdraw from the engagement. He must consider his legal responsibility to communicate to management, to those charged with governance. So he must consider his responsibility to communicating to management, those charged with governance, and the regulator. So this is what the answer you have to highlight on this question. November 19 RTP question. That's the thing. Then, my dear soldiers, November 2020 RTP question they are asking. Very again a new type of question they are asking. See, look at this. MEA Limited is a listed company having its operation across India. MEA Limited appointed Mr. XYZ as a joint auditor. So here the main thing is that you have MEA Limited and XYZ, not ABCD, XYZ, they are the joint auditors. After making sure of all of them qualified to act as a stat auditor, MA Limited issued an engagement letter to all of them. But Mr. X was not clear on some points, so he requested MA Limited slightly to change the terms of his engagement. This change will not impact the ultimate opinion on the financial statement. So it will not impact the ultimate opinion on the financial statement. That's the thing. The engagement letter contains the details on objective and scope of audit, then responsibility of auditor, identification of framework applicable. It also contains expected and form and content of report of all three joint auditors. In your opinion, what is the discrepancy in the audit engagement letter issued by MEA Limited? Brand new question. They have never asked. He's asking that what is the mistake which is there in the audit engagement letter. So, what is the content? So, now, my dear soldiers, here it starts. The engagement letter contains objective and scope of audit. See, what are the primary contents of engagement letter? First of all, scope and objective of audit. That is there, it is there. Second one, form and content of audit report. That is there, it is there. Third one, responsibility of auditor. That is there, it is there. Then fourth one, responsibility of management. Responsibility of management. So responsibility of management, they are not highlighting here. So it is not there. Then fifth one, my dear soldiers, fifth one, what does it say? Is the AFRF. AFRF, is it acceptable? AFRF, is it acceptable? So now it contains the details of objective scope of audit, responsibilities of auditor, okay, responsibilities of auditor, identification of framework applicable, then expected form and content of report. Everything is highlighted actually. My dear soldiers, also he is giving the framework. What is the framework? Whether framework is acceptable. So even that is also given. So what is the discrepancy in this question? The responsibility of management is not given. So SA 210, SA 210, responsibility of management. Now that is one thing which is missing here. So I repeat again one more time, SA 210, response to your management, that is not there. So that you have to highlight, my dear soldiers. That's the thing. Okay, clear? I hope you're clear with this. So again, a brand new question, my dear soldiers. This is a very unique question. They have never asked this kind of question earlier. At least precondition of audit is a straightforward question. Here, he says what is missing in the engagement letter. Management responsibility is not highlighted. Okay. Now, next one, May 2020 RTP question. Your firm has been appointed as a statutory auditor of AGM Private Limited for the financial year 18-19. While verification of company's trade receivable as on 31st March 2019, the accountant of AGM Limited has requested you not to send balance confirmation to a particular group of trade receivable since the said balances are under dispute and the matter is pending in the court. As a statutory auditor, how will you deal with the situation? So he is asking about the balance confirmation of trade receivable. So what they are telling that you please don't obtain the confirmation. Don't obtain the confirmation. So because it is under dispute. So fine, we can oblige the request. First of all, my dear soldiers, you have to have a discussion with management and TCWG. First and the foremost thing, my dear soldiers, have a discussion with the management and TCWG. So have a complete discussion with the management and TCWG about this actually here. Then you have to ascertain the reason why you are having a discussion that, okay, why you are telling us not to obtain the confirmation. You give us a reason. So this is a question from SA 505. See, in SA 505, what happens? There is a client and there is a auditor and there is a third party like trade receivable, trade payable. There'll be a third party. So there is an auditor, there is a client, and there is a third party that is third party that is trade receivable and trade payable. Now, what happens, my dear soldiers? The client, basically, what happens? The client, my dear soldiers, will always what they will do. First of all, auditor will seek a consent from the client that, see, I want to obtain the confirmation. So he will contact the client. He will tell the client that, please give me consent. Then next, what happened? The client will give consent. Okay, they will say, okay, consent given. So they will give the consent. So first one, they'll ask for consent. They'll give consent. Then the auditor will send a confirmation request. The third step, they'll send a confirmation request to the third party, that is trade receivable. Confirmation request, you know, there are two types of confirmation request: positive confirmation request and negative confirmation request. So positive confirmation request, whether balance is agreeing or not agreeing, third party has to respond. And negative confirmation request, third party has to respond only if they disagree. In positive confirmation request, whether third party agrees or not agrees, they have to respond. In negative confirmation request, only if they disagree, then only they should respond. Otherwise, they should not respond. This is how the question is all about actually here. So, my dear soldiers, okay. Now, after we send the confirmation request, the third party will give a confirmation. This confirmation, the auditor will match with the books of account that may agree, disagree. In this above question, is asking that you don't obtain the confirmation. Fine, no problem, will not obtain the confirmation. But first of all, discuss with the management and TCWG, ascertain the reason, and obtain SAI for that reason. He is telling there is a dispute in the court. Okay, part dispute is there in the court, no problem. You give me evidence. Fine, there is a dispute happening in the court, no problem with that. But you please give me evidence, provide the evidence to me. This is all you have to highlight for SA 505 external confirmation. Okay. As I told you, strictly focus on 500, 700. These two series standards are very critical. Okay. But again, they ask questions from other standards also. But be thorough with 500 and 700 series standard. May 2020 RTP question. Mr. PM, a practicing chartered accountant, has been found appointed as an auditor of Truth Private Limited. Okay, fine. What factors would influence the amount of working papers required to be maintained for the purpose of an audit? Now, what is the factors which influence? Now, this question has been repeated twice in the past. Twice they have asked in the earlier times. So this is a very favorite question in SA 230. SA 230, audit documentation. Carefully, they don't use the word audit documentation. They use the word working paper. Audit documentation is nothing but the working papers which are prepared and maintained by the auditor. So he's asking that what are the factors which will influence the amount of working papers. So what factors? First of all, my dear soldiers, I'll write like a mathematical formula. NET of audit procedures, nature, extent, timing of audit procedures. Second one, plus nature of exception, nature of exceptions. Then what are the other factors we'll consider here actually? Then SAI, sufficient and appropriate audit evidence. I repeat, SAI is nothing but sufficient and appropriate audit evidence. So SAI. So nature of exceptions, sufficient and appropriate audit evidence, nature of audit, nature, extent, timing of audit procedure. then risk of material misstatement, risk of material misstatement, then size and complexity of entity, size and complexity of the entity. You have to highlight that. Then audit tools and methodology used, audit tools and methodology used. So there may be a answer question like what is the audit tools and methodology used? Even that also should be highlighted here. I repeat again, the audit tools and the methodology used, even that is also to be highlighted here, my dear soldiers. That's the thing actually. So what is the audit tool and the methodology which is being used? Even that also you should be clearly highlighting actually here. So I repeat again the last point, my dear soldiers. What is the audit tool and the methodology which is being used? Okay, that's the thing. Fine, my dear soldiers. The size and complexity of the entity. And the last point, my dear soldiers, the audit tool and the methodology which is being used, even that also you should take into consideration. Okay, that's the thing. And now next one, my dear soldiers, so these are the various factors you will consider about the thing. And what is the conclusion drawn? What is the conclusion you have drawn actually? All these factors you will consider for the extent or the amount of the working papers. Okay, so this is the answer. Another question on SA 230 audit documentation comes from, my dear soldiers, it comes from the ownership. Mainly, they will ask a question, who is the owner of audit documentation? It is the auditor, obviously auditor. But as per SQC1, it is the auditor who is the owner of the working papers. So that's the thing. But again, he has to provide the working papers to the regulator. If laws and regulation applied, he has to provide the working papers to them also. Okay, so these are the two favorite questions under SA 230 audit documentation. Next question. CA Jill, a recently qualified practicing CA, got his first audit assignment from Natural Private Limited financial year 1920. He obtained all relevant appropriate audit evidence for the items related to statement of P&L. However, while auditing the balance sheet, CA Jill left out appropriate audit evidence, say confirmations from outstanding accounts receivable of rupees 190 lakhs. Continued as it is for last year on the affirmation that management that there is no receipt and further credits during the year. CA Jill therefore excluded from the audit program the audit of accounts receivable on the understanding that it pertains to preceding year, which is already audited by the predecessor auditor. Now, see, this question, my dear soldiers, is based on SA 510. It is based on SA 510. SA 510 initial engagements, opening balances. What is happening? There is a accounts receivable of 190 lakhs. Accounts receivable of 190 lakhs, my dear soldiers, that audit evidence was not available in the previous year. In the current year also, no amount is received on 190 lakhs. What Jill says that since it is related to earlier year, I don't have to bother about that. Why should I be bothered about that item which is related to earlier year? Because already it is audited by predecessor auditor. I will not refer that. Is it correct? Answer is no, my dear soldiers. You have to give a reference. You need to give reference to the items which are unresolved. Now, this falls to the category of items which are unresolved. Still, it is yet to be resolved. So, you can also give reference to SA 710 comparative information, which deals with corresponding figures and comparative financial statement. So, what they say, what they highlight, my dear soldiers, first of all, in 510, what they highlight, as per SA 510, the auditor must obtain SAI. Auditor must obtain SAI whether opening balances are materially misstated. I repeat, the auditor must obtain SAI whether the opening balances are materially misstated. Are they materially misstated, my dear soldiers? They need to obtain the SAI. That is the thing. So, first of all, an auditor has to obtain a SAI that opening balances are materially misstated. Auditor must obtain SAI that the closing balance of the prior period is properly carried forward as the opening balance of the current period. So now, is it properly carried forward? Now there is an issue here, and the issue is unresolved. There is an issue in opening balance, and it is unresolved. So definitely it will have an impact on the current period financial statement. Similarly, under SA 710, what they say that corresponding figure. So suppose say if the issue is unresolved, which is related to the prior period, then auditor should also give a modification in the current period as well as the corresponding figure. So he has to give a qualification. See, 710 deals with the comparative information. What is comparative information? These are the amounts and disclosure of the prior period which are discovered, basically which are related to the prior period. And comparative information, there are two types of information: corresponding figure and comparative financial statement. Corresponding figure, they are part of the current period financial statement, but they are not audited. Whereas comparative financial statement, they are part of the current period financial statement, they are audited and separate opinion is given. Okay. So in India, we follow the corresponding figure. So you have to highlight this while writing the answer. Definitely, contention of Jill is not correct. It is definitely not at all correct in nature. Okay. So that is what the answer you have to highlight it here. Then May 2020 mock test paper question. On 15th March 2020, the directors of Foni Limited instructed their accountant to enter purchase amounting to 1.02 crores from a company incorporated as on 11th March 2020. However, no amount was actually paid, and rupees 1.02 crore was provided in the books of accounts as purchases. So there is no purchases happening. The director is telling that you book an expenditure, purchase expenditure of 1.02 crores. Now, is it permissible? Can it be taken? Whether it is permissible actually here, whether it can be taken or not, that we have to highlight it here. So, first of all, my dear soldiers, understand that this is a fictitious entry. Since it is a fictitious entry, so you have to give reference to SA 240, auditor's responsibility in relation to fraud in the audit of financial statement. What is the auditor's responsibility in relation to fraud in the audit of financial statement? Now, what is a fraud? Fraud is a intentional act by the management, by TCWG, by third party for the purpose of any deception and to take illegal advantage. Here also, by booking expenditure of 1 crore, they are just trying to evade the taxes. That's the thing. So here you have to give focus on responsibility of auditor. As I told you, every standard, most of the items will be focused on responsibility of auditor. What is the responsibility of auditor? The first one, the auditor must obtain reasonable assurance that the financial statement are free from material misstatement due to fraud or error. First point, the auditor must obtain a reasonable assurance that the financial statements are free from material misstatement due to fraud or error. Fraud involves sophisticated and carefully organized scheme to conceal it. To conceal it, you have to highlight that. Fraud always is accompanied by concealing actually here. So there is an unavoidable risk. There is an unavoidable risk that the fraud may not be detected. Fraud may not be detected. So there is an unavoidable risk. So you have to highlight all these pointers. Mainly, you have to highlight about the auditor's responsibility. Plus, any question comes on fraud, please give reference to section 143, subsection 12. That is fraud reporting if it is to central government, if it is more than 1 crore. So you have to give reference to 143, subsection 12. And any question comes on fraud, give reference to CARO 16. CARO 16, which deals with the clause 10 of para 3, which deals with fraud committed on the company, fraud committed by the company. So you have to give three references: SA 240, 143 subsection 12, and CARO. But this question is very tricky question because he's not directly telling you. You have to infer. You have to infer that there is a fraud being committed. He's just asking them. See, if he's telling that based on purchase bill you book, it's okay. Simply management asking, okay, book the entry, that is not acceptable. Okay, fine. 15th question. This is a repeated question from the previous examination. This was already repeated earlier. Essay 250 question. What is this actually? While verifying the employee records in a company, it was found that major portion of the labor employed was a child labor. Major portion of labor is a child labor. Now, on questioning the management, the auditor was told that it was outside his scope of financial audit to look into compliance of other laws. Comment in accordance with the relevant standard on auditing. So here we talk about the laws, we talk about the compliance of law, and SA 250 deals with what? Consideration of laws and regulation, consideration of laws and regulation in the audit of financial statement. So SA 250 deals with consideration of laws and regulation in the audit of financial statement. Okay. Now here there are two types of non-compliance. First of all, when you read this standard, you have to read the definition of non-compliance. What is non-compliance? Any omission or commission which is contrary to the prevailing laws and regulation, that is non-compliance. There are two types of non-compliance. Non-compliance having a direct effect on financial reporting, for example, non-compliance of GST, non-compliance of income tax, non-compliance of company law. It has a direct impact on the financial reporting. And second one, my dear soldiers, non-compliance also deals with what? A non-compliance is also dealing with, my dear soldiers, it is also dealing with other things actually here. So non-compliance is also dealing with, that's the thing actually. This is the scenario, my dear soldiers, that's the thing. So now, my dear soldiers, that's the thing actually here. So that's the thing. So now, my dear soldiers, that's the thing. So non-compliance with the financial reporting, that's the thing. And second one, my dear soldiers, it's a scenario here. This is the thing. So these are the certain pointers actually here. So we have to understand about the non-compliance. That's the thing. Now, my dear soldiers, these are the scenario factors, aspects you need to understand actually here. I hope you're clear. I hope you're understanding the point as far as the non-compliance are concerned. Non-compliance deals with this actually here. This is the pointer you have to understand actually here. Okay. I hope you're clear. I hope you're understanding the point. Now, my dear soldiers, he is talking about non-compliance not having a direct impact on financial reporting. Example, child labor, violation of environmental laws. These are all will not have a direct impact on financial reporting. Should I consider this? Whether the management is telling it is outside your ambit, the contention of management is incorrect. First of all, auditor must obtain reasonable assurance that all laws and regulations are complied with. First, he has to obtain a reasonable assurance that all laws and regulations are complied with. Second one, my dear soldiers, he should consider even the non-compliance of law, which does not have any direct effect on financial reporting, but this may lead to fines and penalty. See, what will happen, my dear soldiers? It will lead to fines and penalty, and that is why you have to consider this actually here. So definitely it must be considered because it is leading to some kind of fines and penalties. So should I consider this? Yes, I must be considering it actually. Okay, that's the thing. So I repeat again one more time. Non-compliance, basically, my dear soldiers, what happens here is that, so for example, say any fines and penalty for that matter. So even for that aspect also you have to consider because here it is having a direct impact on financial reporting. As I told you, it leads to fines and penalties. So the contention of management is not correct. You have to do the reporting. Okay. So you please read responsibility of auditor and also read reporting responsibility of auditor. Responsibility of auditor. Responsibility of auditor is to understand the legal and regulatory framework applicable to the entity, understand the non-compliances. So go through the correspondence from the legal authority. There is also reporting responsibility. For example, if there is a non-compliance, inform TCWG. If there is an intentional non-compliance, immediately inform TCWG. If there's an intentional non-compliance by TCWG, inform audit committee or supervisory board, and also consider the responsibility to report to the authority outside the organization, that is government. Four things in reporting responsibility. If it is a non-compliance, report TCWG. If it is an intentional non-compliance, immediately report to TCWG. If TCWG is involved in intentional non-compliance, report to audit committee, supervisory board. And the last one, consider the reporting responsibility to the higher authority. Okay, so 250 is all about. And one more question in 250 will be, what are the indicators of non-compliance? They may ask you that also. Indicators could be like, say, any legal fees, which is unusual high legal fees which is being paid, adverse media comments, okay, government investigation, fines and penalties paid. So they are the indicators of non-compliance. Now, May 2020 RTP question. Navjeevan Hospital is a multi-speciality hospital which has been facing lot of pilferage and troubles regarding inventory maintenance and control. And on investigation into matter, it was found that person in charge of inventory inflow and outflow from the storehouse is also responsible for purchase and maintaining of inventory records. Inflow, outflow, managing of inventory, maintaining of records. So there is no segregation of duty. That's what it is highlighting. According to you, which basis of system of control has been violated? Also list down the general condition pertaining to such system which needs to be maintained and checked by the management. Here what happens, the examiner creates a deflector inventory. So inventory, you straight away go to SA 501, which is not correct, because he's now focusing the question on controls. And here it clearly indicates that there's no segregation of duty. SOD is missing. So here we have to see the internal check system. Internal check system. So you have to see the internal check system. So what is internal check system? Internal check system, my dear soldiers, one person will not do the one person, my dear soldiers, one person will not do the work of the other person. That's the thing. So internal check system, that's the thing. So I repeat again one more time. What do you mean, or what do you understand by the internal check system? When I say internal check system, it means what? The work of one person is done by is checked by another person. There is a proper segregation of duty. The person who is responsible for inventory should not be responsible for records, inwards, outwards. So that is what you have to highlight. There's a proper control should be there on inventory movement. There should be proper control on the cash. So you have to highlight on internal check system. So this is a repeated question. 3 times they have previously asked on this question. And this is a question coming on internal controls. SA 315. It is related to that actually. And they have asked several times, 2-3 times they have asked in the examination. Nothing new, but it's a repeated question on internal control and mainly is asking on internal check system. Okay. Then another repeated question coming on your way. May 2020 RTP. During the course of audit, the auditor noticed material weaknesses in internal control. He wishes to communicate the same to the management. You are required to elucidate the important points the auditor should keep in mind while drafting the letter of weakness in the internal control system. Now, there is a weakness in internal control, and you want to communicate this to the management. This is a straight question from SA 265. Communicating significant deficiency in internal control to TCWG and management. Communicating significant deficiencies in internal control to TCWG and management. That is SA 265. So SA 265 deals with this actually here. Okay. So I hope you're clear. I hope you're understanding. So SA 265, my dear soldiers, SA 265 deals with this actually here. Significant deficiency in internal control to TCWG and to the management. Now, my dear soldiers, this is dealing with that actually here. That's the thing. So now, in such case, my dear soldiers, that's a scenario here. So what they are asking that you are required to elucidate the important points the auditor should keep in mind while drafting the letter of weakness in the internal control system. What are the factors you should consider about this aspect actually here? Okay, let us try to highlight and let us try to understand this actually here. My dear soldiers, first of all, my dear soldiers, what is the thing actually here? That's the thing. So now in this case, letter of weakness will highlight, first of all, letter of weakness will highlight weakness in internal control. That is the first thing. Letter of weakness will highlight the significant deficiency in internal control and also give suggestion for improvements. What is a suggestion for improvements? You will highlight. The letter of weakness will be an important reference document. It will act as a important reference document for the management. Okay, it is an important reference for document. Suppose say if they want to make a system change, then definitely it's a important reference document for the management. And letter of weakness is also an evidence that auditor is not negligent. Auditor is not negligent. So it is also, my dear soldiers, understand that it acts as an evidence that auditor is not at all negligent of his duties. Okay, so that is what it is actually. So letter of weakness, it is a letter written by auditor to the client highlighting the significant deficiency. So you give quote reference to SA 265. Auditor will obtain SAI and he will put that in letter of weakness. It's like a communication, like how audit report will give opinion. Letter of weakness is also giving an information to the management. Okay, that's the thing. Then another new question, brand new question, where they have never asked this question earlier, so which you should be aware now. May 2020 RTP question. An auditor's inability to obtain SAI refer to limitation of the scope may arise from circumstances beyond the control of the entity, circumstances related to the nature and timing of the auditor's work, limitation imposed by management. Explain with the help of an example. This is a brand new question, and it is a question on SA 500 audit evidence. He is telling that you are not able to obtain audit evidence. Okay, why? Because circumstances which are beyond the control of the entity. What is the circumstances? For example, my dear soldiers, when I say circumstances beyond the control of the entity, for example, say any natural calamity, or fire accident. So there could be a natural calamity or fire accident where evidence gets destroyed, or there could be, like, say, government investigations, and because of government investigation or raid, so government may seize the document. So in these two cases, it is circumstances beyond the control of entity. Any natural disaster happening, and second one, my dear soldiers, the government seizing the document. Then circumstances relating to nature and timing of auditor's work. See, for example, I have taken up the audit, but the physical count of inventory is over. Example, I was appointed as an auditor in the month of April, but physical account of inventory is already over in the month of March. So in such case, I cannot obtain audit evidence because of the nature and timing of the auditor's work. Okay, that's the thing. So auditor, for example, auditor is appointed after the physical count of inventory. I cannot obtain a confirmation because as on 31st March, I was not the auditor. Okay, so if I'm doing audit of 1920, as on 31st March 2020, physical count is done, but auditor is appointed in April 20. So how will he do the audit? Then limitation imposed by management, like for example, not giving evidence, or not giving access to people. So not giving any evidence. Management himself is not giving any evidence. Management is telling that don't obtain any external confirmation. Don't obtain external confirmation. So they will put restriction on us, or they will not give any access to people. So like that. So there'll be a limitation imposed by the management. Because of this, my dear soldiers, what happens? The auditor is not able to obtain the SAI. Brand new question coming up from May 2020 RTP. Very, very important. Okay. So this time RTP, not only of November 20, has brought out new question, but May 20 RTP and mock test paper also have brought out new question on standards on auditing. Okay. That is the thing actually here. So that is a scenario. And then May 2020 RTP question. This is a question which has been repeated in RTP, but they have not asked in the examination. Let us see this question. Mr. Anand is appointed as a statutory auditor of XYZ Limited. XYZ Limited is required to appoint an internal auditor as per the statutory provision of the Companies Act. They appointed Mr. Bhola as an internal auditor. Bhola is appointed as an internal auditor. The external auditor, Mr. Anand, asked internal auditor to provide direct assistance regard evaluating the significant accounting estimates by the management and assessing the ROM. So this is a new concept in SA 610, using the work of internal auditors. So this is a, as I told you, new concept in SA 610, using the work of the internal auditor. SA 610, I repeat again, SA 610, using the work of the internal auditor. Okay, so SA 610 talks about what, my dear soldiers? It also talks about a concept where the external auditor may use the internal auditor providing direct assistance. Sometimes what happens, I have a shortage of staff. When I have a shortage of staff, sometimes I will request the internal auditor and tell that, see, why don't you give your assistant to me? I will use him for my work. So why don't you provide me as an help? So I will request the internal auditor to provide me his assistant as a help. Okay, his assistant to be provided as a help, my dear soldiers. I will request him, see, why don't you provide him as an assistant? So now they'll provide, because they'll provide that assistant, but it should not be any restriction in the laws and regulation. Now he is telling that for evaluating accounting estimate, I will take the help assistance of internal auditor. See, wherever judgment is involved, where too much judgment is involved, you should not take the assistance of the internal auditor providing direct assistance. No, IA providing DA you should not take up. And similarly, when you're assessing ROM, risk of material misstatement, you should not take up the help of internal auditor providing the direct assistance. Okay, that you should not take up. So here, statutory auditor cannot ask for direct assistance for these matters. Next question. Well, your answer will be different if Anand asks direct assistance from Mr. Bola, internal auditor, with respect to external confirmation request and evaluation results of external confirmation procedure. See, external confirmation has to be performed by the auditor. External confirmation procedures should not be performed by anybody else. However, the internal auditor can provide direct assistance only to summarize the results. That's it. So in external confirmation also, we cannot take the help, only for summarizing the results of external confirmation. That's it. Because the direct confirmation should be obtained by the auditor. It should not be obtained by any third party. So this is the answer for this SA 610, using the work of internal auditor and internal auditor providing direct assistance. This is a new concept which has come just 2 years back in SA 610. Okay, fine. This is the thing. So now I have completed important questions on the standards on auditing. We have completed. What I will do, my dear soldiers, we'll take a break of 5 minutes. Once I come back, we'll discuss in the other areas. So these are the important questions in the standards on auditing. Standards on auditing, remember, read from reverse: 700 series, 500 series, 600 series, 400 series, 300 series, 200 series. Next thing, focus more on auditor's responsibility. It could be reporting responsibility, it could be procedures. Focus more on auditor's responsibility. That is the next thing you should keep in mind, actually. Okay, and by solving these questions, what happens? It will give you an insight what different types of questions are being asked. Okay, so now, my dear soldiers, we go for a my dear soldiers, we'll go for a break of, like, say, 5 minutes. 5 minutes break will take up, and then, my dear soldiers, will come up and discuss the some more important aspect, actually. Okay, just take a break of 5 minutes. Now, my dear soldiers, we will march ahead. We'll go to the next aspect actually here. So I had taken discussion on questions, important questions on standards on auditing, which are high potential questions, actually very important questions. Now I am taking up the other chapters for discussion. First, let me take up bank audit. The bank audit November 2020 RTP question is a new question they have given. A brand new question they have given. Anytime brand new question comes, so students get tattered. So it's very important that you go through this November 2020 question. And November 2020 question, my dear soldiers, as I told you, it's a very, very new and a brand new question. So it's a new question altogether. What does it say? ABN Bank was engaged in the business of providing portfolio management services to its customer, for which it took prior approval from RBI. Your firm has been appointed as a statutory auditor of bank's financial statement for the year 1920. Your senior has instructed that you verify the transaction of portfolio management services. While verifying the transaction, you notice that bank has not prepared a separate record for portfolio management services transaction from the bank's own investment as a statutory auditor. What will be your decision for verification of portfolio management transaction? See what is happening. Bank, they are making their own investment, and bank is making on behalf of its customer, and that is called as portfolio management services. So they are maintaining a record which is like same record is being maintained. Whatever record you are talking about, the same record is being maintained, my dear soldiers. That's the thing. Same record is being maintained. Whatever record you're highlighting, they are maintaining the same records altogether. There is no difference as such as far as the records are concerned. That's the thing. So bank have their own investment. Then bank, my dear soldiers, they are also dealing through customer. That's the thing. And as I told you, my dear soldiers, the portfolio management services they are providing actually here. And my dear soldiers, understand that they are maintaining the records. So they are maintaining the same records for both the things. Is it correct? The answer is no, because separate record they should maintain for own investment and separate record they should maintain for portfolio management services. They cannot maintain one single record. They need to maintain a separate record for both own investment and portfolio management services. It's a very simple question, very simple answer, hardly 2-3 liners it is actually. But since it's a brand new question, so what happens sometimes students get confused. So November 2020 RTP, they have asked this question. Otherwise, bank audit, you please read all the past examination question, MTP, revision test paper. So, because most of the times we have seen they never ask any new type of question. Very rare it is actually in the bank audit. Now, May 2020 RTP question. This is a repeated question, my dear soldiers. It is already asked in the earlier exams. In course of audit of Good Samaritan Bank, 31st March 2019, you observed that in a particular account, there was no recovery in past 18 months. The bank has not applied for NPA norms as well as income recognition norms to this particular account. When queried, the bank management replied that this account was guaranteed by central government and hence these norms are not applicable. So what has happened? Account has become NPA. From past 18 months, not a single recovery has happened. See, whenever any advances are under guarantee from central government. So suppose say if there are advances which are under guarantee from central government, there is a guarantee from central government, then my dear soldiers, then in such case actually here, so it is a guarantee coming up from the central government. That's the thing. So now, my dear soldiers, understand that. I repeat again one more time. Advances for guarantee from the central government. That's the thing. So advances for guarantee from central government. Now, in such case, my dear soldiers, that's the scenario here. So what is the advances? That's the thing. So Now, in such case, my dear soldiers, what is happening? It should be treated as a performing asset. So the contention of management is correct. You need to treat it as a performing asset. It cannot be an NPA. You need not apply this because you cannot declare a central government as an insolvent. Central government can never be declared as insolvent. That you should keep in mind. Okay. Now, next thing, what you need to note here is that, okay, next thing, what about the state government guarantee? So suppose say advance are guaranteed by state government. That can be classified as an NPA. But here one more thing is that when our advance are guaranteed by central government, definitely it is treated as a performing asset, no doubt about it. It is a performing asset. There is no issue about it. But the interest should be recognized on realization basis, that is cash basis. The interest income on those advances where the money is not serviced, you should recognize on realization basis or cash basis. Okay, that's the thing. But state government guaranteed entire amount should be classified as a NPA. Okay, this question has asked twice, they have asked in the examination. Second question, banks advance portfolio comprised of significant loans from against life insurance policy. Write a suitable audit program. It has been asked earlier. This is also a repeated question. So you have taken a loan and you provide life insurance policy as a security. First of all, life insurance policy, whether it is assigned with the bank, whether assignment is created in case of bank, and whether premium is paid fully. So I repeat again one more time, life insurance policy is assigned with the bank. And second point, my dear soldiers, the premium is paid fully. So those your answer should revolve around these points when you're writing the answer for this, whether premium is paid fully, whether the policy has lapsed. If the policy has lapsed, you cannot give advances on those life insurance policies. So that you have to check. Okay, it's very simple answer, but they have asked this actually. So this is an RTP question of May 2020. Then May 2020 mock test paper question, and this question was also asked earlier. Again, not a new thing actually here. Again, it's a repeated question. They say that CAS and associates have been appointed as a statutory auditor of central auditors of FDMH Bank for the financial year 1920. During the course of audit, the auditor found that bank has a balance with Zurich-based bank. So Zurich-based bank, they have got a balance. Auditor understands that such balance is a matter of important consideration in the audit of bank. Being a head in charge of assignment, while planning, you distributed the work among your team members, assigned an UNCH for verification of balance of account bank situated in a foreign country. Now, this is where earlier they have asked short notes, balances of bank, balances in account of bank situated in a foreign country. They have asked these questions. However, Mr. Ansh is a fresh to the bank audit, needs your guidance. What he has done, he has given a very detailed question. This is one new thing about this question. This question has been asked, but as a short notes, write a short notes on balances in accounts situated in a foreign country. They have asked, but look at the description he has given. So the description is given to create confusion in your mind. Okay, you have to be very careful when you're reading the question. Calmly, you should read the question without any stress. Okay, the answer will not come. You read it thoroughly, then you understand. So balances with the banks in a foreign country. First of all, as usual, confirmation you obtain. Second thing, you have to go for reconciliation. Then you have to see the debit and credit balance, old outstanding balances. So you have to ascertain the reason for that. So these are the things actually here. You have to obtain confirmation from that bank, and reconciliation should be there. If any debit or credit, old outstanding balances are there, what is the reason for the same? You have to ascertain. This is the simple thing you have to revolve around this particular question. Okay, so that's the thing. So bank audit only for the latest November 2020 fresh new question was given. Now in the bank audit chapter, definitely it's a very big chapter. First, straight away you go into advances. Please go read advances. In advances, you read the sale and purchase of NPA, So NPA can be purchased and sold by the banks. So they may ask question on this. In bank audit, you also focus on advances, like say advances, practical questions on advances, then internal control on advances, then internal control on credit card operation, then inter-branch accounts. They may ask question on this, inter-branch accounts, concurrent audit. So concurrent audit is the favorite area. Then statutory liquidity ratio, and also, my dear soldiers, statutory liquidity ratio and contingent liability. This is one of the contingent liability is a favorite area of banker. In contingent liability, they will ask for bank guarantee, then demand draft without advice, DD without advice, then acceptances and endorsement, basically letter of credit, letter of comfort. So this is the area, important area for the bank audit. And then, my dear soldiers, in bank audit, also, like as I told you, concurrent audit, you have to focus contingent liabilities, statutory liquidity ratio, and questions on advances. Then corporate debt restructuring, CDR. So corporate debt restructuring. So this is the areas you have to focus on bank audit. Bank audit, my request, straight away jump into advances. What is relevant for first you read advances thoroughly. In bank audit, very critical is advances, contingent liability, concurrent audit. These are all very critical areas in bank audit. Okay, and internal control on telegraphic transfer and mail transfer. Internal control on TT, telegraphic transfer and mail transfer. That is NEFT, RTGS is highlighting about that. Okay, so this is our preparation should towards the bank audit. Now, insurance audit, November 2020, RTP question. In insurance audit, again, a new question they have given, brand new question. Lot of efforts they have put to create this RTP because I see a lot of new questions coming up. So that is the beauty of it. Now, MPS Associate Chartered Accountant firm started the statutory audit of their client, Contingencies Limited, a general insurance company, which has a paid up share capital of 16,800 lakhs. So which is nothing but 168 crores. 168 crores. So to start a insurance company, you require a minimum paid up share capital of 100 crores. So just to start a life insurance, general insurance, you require 100 crores. To require 100 crores. To start a reinsurance company, you require a paid up share capital of 200 crores. Okay, that's the thing. Now, during the course of audit, it was found that company was not maintaining required solvency margin as per the provisions of Insurance Act. So they are not maintaining the solvency margin as per the provision of the, my dear soldiers, of the Act. They are not maintaining the solvency margin. That's the thing. So, my dear soldiers, the solvency margin is not maintained. That's the thing. So they are not maintaining the solvency margin. Now, when the issue was escalated to management, they replied that solvency margin needs to be maintained as per the limit only as in the last day of the financial year. Whether reply of the management is tenable. Solvency margin, they never asked this question. Now, first time they have highlighted. What is solvency margin? Asset minus liability should be greater than 50% of the minimum paid up share capital. Means, are you like solvent? Okay, are you competent to run the company? See, solvency margin, it tells that you should maintain as on balance sheet date. Not at all correct. Solvency margin should be maintained throughout the period, and a statement of solvency margin should be filed with IRDAI. With IRDAI, you have to file the statement of solvency margin. That is the thing. So, whether the statement of solvency margin is filed with IRDAI, that is what you need to check. That is what you have to examine. So that is the thing, actually, my dear soldiers. So whether the statement of solvency margin is complied or not, that is what you have to highlight it. Actually, that's the thing. So here, what you have to see, my dear soldiers, comment. What you have to comment whether reply of the management is it tenable or not tenable. That's the thing. It is not correct. You have to maintain solvency margin throughout the period. And second thing, my dear soldiers, the management should ensure, what they should ensure, my dear soldiers, is that in case of statement of solvency margin is filed, if the solvency margin is not complied, then the IRDA will make an application. IRDA, I repeat again, IRDA will make an application, my dear soldiers, to dissolve the company. So that is what it is actually. So I repeat again one more time, IRDA will make an application to what come out to dissolve the company. That is what you have to understand actually. That's the thing. Okay. I hope you are clear with this actually as far as the insurance audit is concerned. That's the thing. Now, next question. So solvency margin you read, because a lot of you can say MCQ questions are also coming on that. So that you please be thorough. Then Amrapali and Company, chartered accountant, are auditors of Natural Care General Insurance Company Limited. As on 31st March 2019, the management made a provision for claims outstanding. Enumerate the steps to be taken by the auditor while verifying the claims provision. What are the steps to be taken? Now, claims provision is a normal question which is often being asked. It's regularly it is asked actually, claims provision. So this is a repeated question from the earlier exam also. Claims provision, for example, claim provision should be made. Provision should be made for claims which are intimated. So in insurance company, major expenditure is the claims. Next, to write down provision should be made after considering the payment on account. Provision should not exceed, my dear soldiers. So we should not exceed the life insurance policy. So whatever provision which is being made, so it should not exceed the sum assured. Basically, the sum assured it should not exceed. Then is there any litigation in case of claims? Okay, so on and so forth. So these are the things you have to highlight in case of the claims provision. It is fairly a repeated question from the previous examination. Okay, then when you're reading the chapter of insurance, whenever you're reading the chapter of insurance, you have to classify as a general insurance and life insurance. General insurance for old syllabus and new syllabus, and life insurance is only for the new syllabus. So general insurance, first of all, my dear soldiers, read premium. Then you have to read claims. Then you have to read commission, which is paid to the agents. Please focus on that. And in case of general insurance, also read, my dear soldiers, the outstanding premium and agent balances. Any outstanding premium and agent balances. Then solvency margin, which we discussed now. Unexpired risk reserve. Then trade credit insurance. I repeat again, trade credit insurance. That's the thing. And then investments made by the insurance company. What are the investments? And lastly, my dear soldiers, apart from investments, it also has what, my dear soldiers, the contingent liability, like partly paid investments. Okay, so unsettled foreign exchange contracts. Okay, so guarantees given, contingent liability in case of general insurance. In case of life insurance, please focus on actuary. Please focus on underwriting. Please focus on investment department. This is a new thing which has come up, investment department. Then free look cancellation. So free look cancellation in case of the new syllabus, FLC. So free look cancellation, that you have to focus. Then also, my dear soldiers, surrender of policy. Then policy lapse. And as far as the, what you can say, the premium and claims, if you read this, it will be highlighted here also. Okay. And in general insurance, also we have a concept called facultative reinsurance. There are two types of reinsurance, facultative and treaty. In facultative, every contract will have every risk will have a separate contract. In treaty, what happens? Separate one contract will cover all the risk within the limits. Okay. So facultative reinsurance, you go through it actually. That's the thing. So insurance, this is my guideline to you. Straightforward questions will come. Not much twisting will happen. So it's a fairly easy topic, but little lengthy in nature that you should be taking care. Then coming up to the next question, audit committee and corporate governance for November 2020 RTP. And this is a brand new question. It's a brand new question. They have never asked this question. I think the examiner again has really worked very hard on this question. So let us read, let us be aware of this topic. Now, FCA Associates Chartered Accountant is one of the leading auditing firms in Guwahati. Firm received assignment to examine compliance of conditions of SEBI LODR, corporate governance of listed entity with no outstanding SR equity shares. SR means superior rights. SR is superior rights, no outstanding superior rights shares. The firm has made following observations. Now, first of all, you understand that corporate governance is a concept which is only applicable to the listed entity. Only listed entity will come under the purview of the corporate governance. That is the first thing. So corporate governance, it deals with what? The composition of board of directors, the compensation of the board of directors, the remuneration structure, then creation of audit committee, then stakeholders relationship committee, nomination and remuneration committee, risk management committee, vigil mechanism, code of conduct. So then management of material subsidiary of a company. So these are the things actually, management discussion analysis, so and also utilization of public funds raised by public issue, rights issue. So those things are covered under the corporate governance. In corporate governance chapter, generally all the questions were revolving around what is audit committee. Audit committee, it should meet 4 times in a year. Maximum time gap between audit committee meeting, not more than 120 days. And it is revolving around the what is a mandatory review done by the audit committee. Then the question was often asked on my dear soldiers related to what you can say, what is covered under corporate governance, which I already highlighted that. And the question was revolving around what are the qualifications, like what are the qualifications like that. So qualifications in case of a corporate governance, for example, a board of directors are not meeting. Board meeting is not held for more than 4 times in a year. My gap between two board meetings is not more than 120 days. So these various things comes under this actually. Okay, various things are covered and they come into picture. That's the thing. Okay, so I hope you're clear, my dear soldiers. So these various things will come into picture as far as the corporate governance is concerned. That's the thing. So my dear soldiers, it's like a repeated questions were only coming. But now what has happened? They have given a very new question. They have never asked this question. So it is examiner is exploring other areas. Selective study will always be a challenging. Look at this. Observation number 1. Mr. Fine, a director of a company, also the chairman of stakeholder relationship committee. SRC basically, what happens? SRC is created to address the grievances of the shareholders. Okay, was also acting as audit committee chairman in other 4 listed companies and 1 private company simultaneously. So now see, any director, see, when we talk about the composition of board of directors, first of all, at least 50% should be non-executive director. And if the chairman of the board is executive director, then at least 50% should be independent director. If the chairman of the board is a non-executive director, then 1/3 should be independent director. If the chairman of the board is non-executive promoter founder, then 50% should be independent director, 1 woman director. A director should not be, like say, he should not be a chairman in more than 5 committee, and the director should not be a member in more than 10 committee. A board meeting should be held at least 4 times in a year. Maximum gap should not be more than 120 days. Okay, these are the things come in composition of board of directors. Here, our sir, Mr. Fine, is holding the chairmanship in 6 companies. 6 companies is a chairman. So as I highlighted that you cannot be chairman in more than 5 committees. So he's a chairman is SRC of that listed company, which we are discussing now. Then is also acting as an audit committee in other 4 listed company, that is 5, and 1 private company. So private company will not be counted for this. It will be excluded from the limit of count. So you have to be chairman, you cannot be chairman more than 5 listed company. Private company is not counted. So this is not a violation. It is not a violation. It is well within the limits. Okay. So here learning is a director. You should be director. What come on? In more than maximum, you can be a director can be chairman in maximum 5 committees. That is a learning point you should know. And private company is excluded. Second observation. NRC, Nomination and Remuneration Committee, consisted of 6 members and who regularly met biannually. Biannually means once in 2 years. Once in 2 years. This is definitely not acceptable. So Nomination and Remuneration Committee should meet yearly once. Yearly once the meeting should be done. So biannually means it is they are meeting once in 2 years. No, Nomination Remuneration Committee should meet yearly once. So this is definitely a violation, my dear soldier. Definitely it becomes a violation. It has to be reported. Then next one, third observation. So Nomination Remuneration Committee is involved in selection of director, remuneration of director, training, all those things they are involved. Then third one, Risk Management Committee consisted of 9 directors, out of which the number of independent directors are majority, but it is less than the 2/3 of the total strength. 2/3 of the total strength. So now Risk Management Committee consisted of 9 directors, out of which the number of independent directors is the majority, and it was less than the 2/3 of the total strength. So here in Risk Management Committee, basically you should have 2/3 as independent director. So my dear soldiers, 2/3 should be independent director. That is a composition. So it is definitely a violation. It acts as a violation. This has to be reported. The reporting of the same should be done. Okay, so that's why I told you 2/3 should be what come on independent director and not majority, not more than 50%. Okay, so this is a question on corporate governance. Okay, so go through this. So corporate governance, I already highlighted, my dear soldiers, that in case of corporate governance, you need to go through the definition of corporate governance, what is comprised in corporate governance, audit committee. Audit committee is very, very important. The functions of audit committee, mandatory review of audit committee, then nomination remuneration committee, stakeholder relationship committee, then my dear soldiers, risk management committee. So information to shareholders, all these things, code of conduct, all these things you should go through. Okay, as far as the audit committee and corporate governance is concerned. Coming to the company audit. Company audit, my dear soldiers, you have to focus on CARO. CARO is must. So when you're reading company audit, my dear soldiers, first be thorough with section 141, the eligibility, qualification and disqualification of auditor, and 143, rights and duties of auditor. In rights and duties of auditor, section 143, subsection 3, which deals with reporting, then 143, subsection 11, which deals with CARO 16, and you have to be thorough in company audit with 143, that's it. So 143 subsection 12, that is fraud reporting more than 1 crore. Okay, so 141 is important, 143 is very, very important. First you be thorough with this, then other provisions you go through it actually. Okay, that's the thing. Now Petro Limited is engaged in generation of electricity for captive consumption through captive generating plant. The company also maintains cost records in their books of accounts as required under cost records and audit rules. Mr. Zylo, a friend of managing director of the company, suggested that the name of his brother, who is a cost accountant in practice, for the purpose of the cost audit. Okay, that's the thing. However, statutory auditor is of the view that company is not legally required to conduct the cost audit. Now, the managing director is in a dilemma about the requirement of the cost audit. Being an expert in cost audit and records, you're required to guide in this regard. First of all, please understand, my dear soldiers, that cost audit when it is applicable. So he's asking for a cost audit when it is applicable. So you have to divide the industry into 2 parts. So you have to first of all give reference to section 148 of the Companies Act. You have regulated sector, you have non-regulated sector, regulated sector and non-regulated sector. Regulated sector like electricity supply, telecommunication, if the turnover is 50 crores or more, and if the individual turnover is 25 crores or more, then cost audit is applicable. In non-regulated sector like steel and cement, their aggregate turnover is 100 crores and individual turnover of a product is 35 crores or more, cost audit is applicable. But there are three exceptions where cost audit is not applicable. What are the three exceptions? If the entity is operating in SCZ. Next one, the total more than 75% of the turnover is from exports. So the entity is operating in SCZ and more than 75% of the turnover, my dear soldiers, is coming through the purview of exports. It is coming from the exports. And so as I told you, first is SCZ, and more than 75% of turnover is coming from the exports. And where they are into electricity production, which is used for captive consumption. I repeat, electricity production used for captive consumption. So here, same thing they are highlighting. Generation of electricity for captive consumption. Captive consumption means own use. It is for own use. So in such case, my dear soldiers, what happens? The cost audit will not be applicable. So the statutory auditor is correct. Cost audit will not be applicable. It is an exception for the applicability of cost audit. Okay, so this is the question. Again, it's a brand new question. So they have never asked this question, and it is a November 2020 RTP question. Okay, that's another company audit question. Comment on the following with reference to Schedule 3 of the Companies Act 2013. Schedule 3 often students neglect. Please don't neglect Schedule 3, my dear soldiers. Very, very important. And that too, Schedule 3, you have three parts in Schedule 3. You have Division 1 and Division 2 and Division 3. Division 1 is applicable to companies under Indian GAAP, the old accounting standards. Division 2 is on Ind AS. It is to companies on Ind AS. And Division 3, my dear soldiers, for NBFC. My humble request to all of you is that please be thorough with balance sheet items. If you're reading Schedule 3, you be thorough with the balance sheet items. Most of the times, questions are based on balance sheet items. Okay. So be thorough with balance sheet items actually. So for example, balance sheet item, like say trade payable, amount payable to MSMED, amount payable to others other than MSMED, trade payable, then inventory, then tangible fixed assets. Tangible fixed assets, nothing but property, plant, equipment. Means all balance sheet item, you please be thorough. Okay, Division 1 and Division 2 and Division 3 just go through once. Division 1 and Division 2 are now hot favorite for the examiner. Okay, now what is the thing? A company has disclosed performance guarantee and counter guarantee as contingent liability. Is it correct? Performance guarantee means company will tell I will perform, I will give guarantee for my own performance. See, guarantee means you're giving guarantee for a third party. Now, when you give guarantee for a third party, that will come under contingent liability. Whereas performance guarantee and counter guarantee, they are given guarantee for their own performance, for meeting their own obligation. I repeat again one more time, meeting their own obligations, my dear soldiers. So in such case, it cannot be classified as a contingent liability. Why? Because a guarantee will be treated as a contingent liability. I repeat, a guarantee will be taken as a contingent liability only if it is given for a third party. Here, for company's own performance, no, it cannot be treated as a contingent liability. This question has never been asked. It's a brand new question of May 2020 mock test paper. Second one, a company has clubbed all expenses under the head, other expenses on the basis of 1% of revenue or 5,000. It is not 5,000, it should be 1 lakh. 1% of revenue or 1 lakh, whichever is higher. So this is also wrong. Then company showed deferred tax liability under non-current liabilities and deferred tax asset under non-current asset. No, this is also not correct. You have to show a net off. You have to net off the DT, deferred tax liability, and DTA, and you have to show the net amount either under non-current liability or non-current asset. Okay, but it has to be netted off. So net off has to be done, my dear soldiers. Here there is no net off being done, so that is a challenge and that is a problem actually. Okay, everybody is clear? Are you getting it? Are you getting the concept, my dear soldiers? Fine. So a deferred tax liability under a non-current liability, that is under deferred tax asset and deferred tax liability. So definitely, my dear soldiers, it will come under the purview of the it will come under that particular purview. So it has to be netted off. It is not as per Schedule 3. This third question they have already asked earlier examination. First and second is a new question. Okay, fine. Schedule 3, please go through. And if you don't have time, then focus only on the balance sheet item. That will help you a lot. Then audit reports. Coming up to audit reports is all about 700, 705, 701, 710, and 720 standards. So these are the standards, my dear soldiers, which are dealing, and also 706. Audit report is focusing on these 6 standards. So in SA 700, first of all, you have to see what are the specific evaluation for giving a unmodified report. Specific evaluation means what is a specific? For example, financial statements are prepared as per accounting policy. Accounting policy is consistent as per AFRF. Okay, then accounting policy is properly disclosed, properly applied. All these things are specific evaluation. Okay, so specific evaluation, that's what it is. Financial statement are prepared as per accounting policy. Accounting policy then applicable as per applicable financial reporting framework. Accounting policy is properly disclosed and properly applied, so on and so forth. And SA 700, you focus on format of audit report. In format of audit report, four points you should be very clear. One is opinion paragraph. Opinion paragraph you by heart. Then basis of opinion paragraph. So opinion paragraph you should be thorough. Basis of opinion paragraph you should be thorough. You should be thorough with management responsibility and auditor's responsibility. So opinion paragraph, basis of opinion, management responsibility, and auditor's responsibility. Opinion and basis of opinion, several times they have asked, and auditor's responsibility they have asked once. So be thorough with that actually, as far as SA 700 is concerned. And coming up to SA 701, SA 701 key audit matter. This is a favorite standard of examiner nowadays. So you be thorough with full standard, read the standard fully. Even though practically it is only applicable for listed company, since it's a brand new standard, be thorough. Key audit matters. These are the matters presented and disclosed in the financial statement, so which are important. So key audit matter, you please focus on that. Fully you read the standard. Okay. And then SA 705. SA 705, you have to by heart the qualified opinion, adverse opinion, and disclaimer of opinion. Not the definition. Please don't by heart the definition, but how these opinions are drafted, that you please by heart. Actually, qualified opinion, adverse opinion, and disclaimer of an opinion. Okay, so this, my dear soldiers, because they'll ask you to draft the opinion, drafting of opinion, they'll ask you to do it. So that is where you have to be highlighting it actually. Okay, that's the thing. See, in qualified opinion, if one or two material misstatement or one or two SAI not available. This is only for understanding I'm giving you. One or two SAI not available or one or two material misstatement. Adverse opinion, SAI will be available. SAI is available. SAI, my dear soldiers, is available. So SAI is there. So SAI will be available, my dear soldiers. That's the thing. So in adverse opinion, as I highlighted, my dear, so SAI is available, but more than two material misstatement. And disclaimer of opinion, my dear soldiers, more than two SAI not available. So this logic you should keep it whenever you are answering the question, because they'll ask you to draft the opinion. So you have to draft the opinion, means you have to not the definition, but how the opinion is drafted, qualified, adverse, disclaimer, that you should be very clear. Okay. So when do we give qualified or adverse? I'll just give you certain instances. Take example. Inventory is overvalued by 10 crores. Now, company inventory is overvalued by 10 crores. November 16 RTP question. So inventory overvalued by 10 crores, you have to give a qualified opinion. Why? Because it is one issue, qualified opinion. Second one, no evidence was available. No evidence was available. So there was no evidence available. So there was no evidence available for my dear soldiers, and no evidence is available for investment in foreign associate. No evidence available for investment in foreign associate. This is a question, but the question was very detailed. I'm just giving you the gist of question. No evidence available for foreign investment in foreign associate. Generally, students will go for disclaimer. No. Here I told you what, one or two SAI not available. I have to give a qualified opinion. So here, one evidence not available, I'll give a qualified opinion. Okay, that's the thing. Then, my dear soldiers, so another thing actually here. So, for example, while preparing consolidated financial statement. So when you're preparing consolidated financial statement, the parent company did not consider one subsidiary, for consolidation. They did not consider one subsidiary for consolidation. So while preparing consolidated financial statement, the parent company did not consider one subsidiary. One particular subsidiary was not considered for consolidation. So one particular subsidiary is not at all considered for the consolidation. So now in such case, what happens when one particular subsidiary is not considered for consolidation? Here all accounts will get affected because we are preparing CFS. And if entire one subsidiary means a balance sheet will not be correct, P&L will not be correct. So you have more than 2 mm. So here you will give a adverse opinion. You will end up giving a adverse opinion like that. So they'll ask you a question. They'll say you give an opinion on this. Another question may be like this. For example, SAI not available on accounts receivable, accounts payable, and inventory. So it is a disclaimer of an opinion. More than 2 SAI not available. Question may be like this: 80% of evidence not available. 80% of evidence not available, then it has to be a disclaimer of an opinion. So you need to give a disclaimer of an opinion in this regard. Okay, that is the thing. So SAI not available, then you end up giving what, come on, my dear soldiers, a disclaimer of an opinion to be given. Okay, that's the thing. So please go through, my dear soldiers, please go through the pointers, my dear soldiers. Please go through the evidences, whether these evidences are proper or not, that you need to be highlighting actually. So as I told you that SAI not available. So if majority of SAI not available, then we have to give what, come on, a disclaimer of an opinion. Then when you're reading 706 emphasis of matter paragraph, other matter paragraph. So read the definition. Please read the definition. Plus, you also read the examples. Either definition or examples, they'll ask question. The emphasis of matter paragraph and other matter paragraph. Either definitions or examples. You please be thorough with that. In 710, comparative information, you please focus only on the corresponding figures. There are two types of comparative information. Comparative information means prior period information, corresponding figures and comparative financial statement. You please focus on corresponding figures, questions which are related to corresponding figures. Okay. And 720, my dear soldiers, 720, it deals with the other information. So in this case, the standard is newly revised actually. So when I say other information, my dear soldiers, there is three things are there. Material inconsistency. So I repeat, material inconsistency in other information, material inconsistency in financial statement. Our auditor should update his understanding. Auditor should update his understanding on entity and its environment. Auditor should update his understanding on entity and its environment. So you focus on these areas actually here. Okay, that's the thing. So my dear soldiers, drafting wise, 706 they'll choose and they'll throw one question to draft the answer. Okay, that's the thing. So now let me read the question. AKB Associates, a renowned audit firm in the field of CA practice from past 2 decades. The firm appointed to conduct statutory audit of RECA Limited, an unlisted company which is engaged in the business of paper manufacturing. It is decided to commence the audit recently concluded financial year. Once after making significant progress in audit, auditor made the following observation. There was some observation. Observation 1. Management has disclosed in the financials that during the year, one of the warehouse of the company was affected by majority of the floods. As a result, the company has incurred some losses, but the management told it was not material. It was not material. So company has suffered losses. Where you will show this? You will show this, my dear soldiers, under the emphasis of matter paragraph. It will come under emphasis of matter paragraph as per SA 706. Sir, why emphasis of matter paragraph? What is emphasis of matter paragraph? Emphasis of matter paragraph is a paragraph included in the auditor's report. I repeat again, it is a paragraph included in the auditor's report that refers to matters presented and disclosed in the financial statement, which as per auditor's judgment is important for the user understanding of items in the financial statement. So it is a matter presented and disclosed in the financial statement. Okay. So here, see, look at this. Management has already disclosed this item in the financial. So you are just trying to draw the attention of the user on this item. Okay. Always remember, emphasis of matter paragraph will give reference to something which is contained in the financial statement, something which will be there in the financial statement. There is no modification. There is no modified opinion. In fact, emphasis of matter paragraph, it draws attention to some items in financial statement. The financial statement runs in 300 pages. Which item, what is important, we don't know. And that is why, my dear soldiers, it draws attention to items. So since it is not material, you will highlight under emphasis of matter paragraph. Another matter paragraph, it is referring to matters related to audit. I repeat, it is referring to matters which are related to audit that you should keep in mind. Okay. Now, observation number 2. Observation number 2, what they say, due to floods, few records of maintained by the company with respect to particular transactions were completely destroyed, and there was no duplicate records maintained by the firm. However, these details were not pervasive but material. Not pervasive but material, this is only used in qualified opinion. So it is a part of qualified opinion. So there we use the word not material but not pervasive. So the second observation will be qualified opinion. This is a brand new question of November 2020 RTP. It's a brand new question, my dear soldiers. Okay. Qualified opinion, adverse opinion, disfavourable opinion. You keep this formula in the mind. Okay. 1 or 2 misstatement, qualified. 1 or 2 sign not available, qualified. Adverse, more than 2 material misstatement. And disclaimer, more than 2 sign not available. This you don't write in exam. This is for understanding of concept. An emphasis of matter paragraph will always refer something in the financial statement. And other matter paragraph will refer matters which are related to audit. For example, we did not do branch audit, or we did the audit of the subsidiary company that way. So other matter paragraph will always refer to items which are there in the what you can say, my dear soldiers, audit or auditor's responsibility. Okay. So 700 series standard, very important. Sure, short questions will be there. Then audit under fiscal law. Audit under fiscal law, my dear soldiers, we talk about tax audit. Tax audit, you have 44 clauses. 44 clauses. Should you know all the 44 clauses? Yes. 44 clauses you should know thoroughly. But in tax audit, my dear soldiers, the very important clause are clause 4. Then clause 8 is very important. Then clause 12 is important. Clause 12 deals with the income, profits and gains from a presumptive basis actually. Clause 12 is very important. Then clause 11, which talks about books of accounts. Then clause 13 is important. 13 talks about the accounting standard. ICDS comes into picture. Clause 14, valuation of closing stock. that is important. Then 15, no, 16 is very, very important. 16 is important. Then 17 they ask, 18, 19, yes, 19 they ask, 20 also they ask, and 21, very, very important clause of 3CD. So then 23, very important, on related parties, talking about related parties. And after that, 24, 25, 26, 26 is all about 43 CB. So 43 CB, that you should read thoroughly actually. Then 27, then 28 is important, and then 29 is important. Now this time they have given an amendment, 29A and 29B, that you should be thorough. And then 30A and 30B, this also you should be thorough with actually, 30A, 30B. And in tax audit, my dear soldiers, 31, yes, also important, 32, important. Then 34, 34 is a clause important, 35 is also important. Then 37 is important. Then, my dear soldiers, 40, 41 is important. So these are the clauses you should be thorough with actually here, okay? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26. I'm asking you to be thorough with these 26 clauses. Other clauses, go through them. But these 26 clauses out of 44 are very, very important. Be thorough with these clauses actually, as far as tax audit is concerned. Now, and 16 and 21, one of the favorite clauses of the examiner. And amendments, these are the amendments, 29A, B, 30A, 30B. These are all new amendments which has come up, okay? When 42, 43 are also amendments, but it is so. But till 41, definitely yes. Okay, I don't advise selective study, but if you have a time limitation, then focus accordingly. Audit under fiscal law is all about tax audit and stat audit. Tax audit and GST audit, my dear soldiers, that's a thing. So tax audit is, again, I told you, important clauses. Let me take up this question. PQRS and associate is appointed as conducting tax audit in Income Tax Act. So moment they say Income Tax Act, you have to be very careful actually. So it is a tax audit question. So you should be thorough with this. So they say they'll use the word tax audit. So immediately you should be giving link to 3CD. These clauses are all related to 3CD. Remember that. Okay. A cotton textile company. Now the company has incurred rupees 6 lakhs towards advertisement expenditure on a brochure pamphlet published by a political party in Pune. Advise the auditor whether such expenditure should be included in the tax audit report or not. Whether such expenditure should be included in the tax audit report or not, you have to advise. Now, see, this advertisement expenditure is highlighted in clause 21A. 21A. First time they're asking question on this advertisement expenditure. 21A, what does it say? Amount debited to P&L, and you have debited the advertisement expenditure to the P&L, so which is not allowed. See, tax audit is all about whether there is any kind of tax evasion. Is the assessee doing any kind of tax evasion? That is what you highlight in case of the tax audit. I repeat again, whether the assessee is doing any kind of tax evasion, that's what he highlights actually, okay? That's the thing. So this you have to answer as per clause 21A. Then, next question. Ramanuj, a chartered accountant by profession, has been appointed as a GST auditor of ABC Limited. Management asked Mr. Ramanuj for GST audit to file GSTR 3B for the months July and August 2019. Filing of annual return GSTR 9. He says, Ramanuj, apart from GST audit, you also do filing. This is a November 20 RTP question. So you also do filing of GSTR 3B and GSTR 9 annual return. This also you should do. Okay, they are telling this, whether it is acceptable. So if you are doing GST audit, you should not be doing this filing. An annual return filing, that is GSTR 9 and GSTR 3B, is a responsibility of management. This GST auditor should not be doing it. Now, Mr. Ramanuj contended that he has been appointed only for GST audit and above are his scope limitation and cannot be conducted as the compliances and returns are to be filed by the management. In the context of the above dispute, you have to justify and suggest whether contention of Ramanuj is correct. Ramanuj is absolutely correct. Why should he do it? He should not be doing it actually. No filing of returns, no filing of annual return. It has to be done by the management. Okay, that's the thing. In GST audit, you have to focus on GSTR 9C. You have to focus on, first of all, introduction, types of GST audit, types of GST audit. You please read the types of GST audit. There are 3 types of GST audit under 35(5), under 65, 66. So you please be thorough with the types of GST audit. Then you should be thorough with GSTR. What is the difference between GSTR 9 and 9C? How do you differentiate between them? Then you go to GSTR 9C straight away. In GSTR 9C, focus only on 3 clauses: clause 5, clause 7, and clause 12. Clause 5, clause 7, clause 12. 3 clauses you should be thorough. 5 and 7 talks about turnover. 12 talks about ITC, input tax credit. So GSTR 9C, you should be thorough with these clauses 5, 7, and 12. Okay, so that you have to be very thorough with it actually. Ultimately, GST audit is all about what? See, you will check turnover declared, taxes paid, refund claimed, and ITC availed. It is all about that. That is what you check in case of GST audit. For answer for this question, Ramanuj is absolutely correct. You should not be doing other filing. Next question. ABC Printing Press, a proprietorship concern, made a turnover of 1.03 crore for the year 31st March 2019. It's a repeated question from the previous examination. This one, this tax audit question was not repeated. This also was a new question, GST audit, but this is a repeated question coming up actually here from the tax audit. Okay, ABC Printing Press proprietorship concern made a turnover of 1.03 crore for the year ended 31st March 2019. The management explained its auditor, Mr. Z, that it undertakes different job work orders from various customers. The raw material required for each job are dissimilar. It purchases the raw material as per specification and requirement of each customer, and there is hardly any balance of raw material remaining in the stock except pending work in progress at the year end. Because of the variety and complexity of material, it is impossible to maintain a stock register. Give your comments. Now, here, my dear soldiers, the tax audit report talks about clause 11. Clause 11 of 3CD talks about the books and records. Books and records. So you should give reference to clause 11. And clause 35 talks about the stock register. Specifically, it will talk about stock register. Clause 35 of 3CD. Okay. So 35, I told you, very important. 11 also very important. 11 talks about books and records, and 35 talks about the stock register. So stock register for trader and manufacturer. So you have to highlight that there is a violation of these clauses 11 and 35. That is what the answer you have to highlight in your examination. Okay. Here, non-maintenance of stock register, I have already given you, my dear soldiers. So 35, clause 35B and 11B of form 3CD. Form 3CD. So you have to highlight this. This you have to highlight that it is not maintaining the stock register. So reference should be given for this actually. Why they are not maintaining? What is the reason for non-maintenance? Okay. Then next question coming up on GST audit. Again, a brand new question. PQR Limited is a textile company with aggregate turnover exceeding 2 crores. XYZ Associate is a chartered accountant firm which is appointed for GST audit of PQR Limited. Mr. Sandhu, chartered accountant from XYZ Associate, observes that 23rd July, the PQR Limited has not filed GSTR 3B for the month July, and GSTR 1 return is not complied with. What should Mr. Sandhu advise the client before GST audit is commenced? Simple. File all the returns, file 3B, file GSTR 1, and file GSTR 9, annual return you file. So we have to tell that you avail all ITC. You avail all ITC. If any reverse charge mechanism, any liability under RCM is there, you pay that. So we have to tell them before commencement of audit, we have to tell that please file all the returns, and whatever ITC you have not availed, avail it. And whatever, like say, expenses on which reverse charge mechanism is coming at, you please pay the taxes on that. So that is what the advice we have to give. Okay, this is a new question altogether. So here there is a answer for this. So 3B GSTR 1 annual return must be filed actually. So this is given highlighted here. So it has to be filed. ITC is not availed, it has to be availed. And RCM, reverse charge mechanism. So these things you have to highlight when you're answering the question. Okay, fine. So all the GST audit question are brand new question. Earlier they have not asked this question. So we have to be thorough with that actually. Tax audit question, the stock register, they have asked earlier. Okay, so that's the thing. GST audit, how you should read it, what you should read it, I've told you. And tax audit also I've told you which are the clauses you should be thorough when you're reading actually. Okay, not every clause is important, but at least focus on important and high weightage clause first. And if you have time, then you cover other clauses also. Okay, that's the thing. Then, my dear soldiers, next topic which comes here is the due diligence, investigation, and forensic audit. Now, due diligence, investigation, forensic audit, most of the time you get repeated question in the exam, most of the time. And what I say is that they don't ask any new question, they don't experiment in this topic like bank audit, insurance, due diligence, investigation, forensic audit, internal audit. These are the 4 chapters where not much experimentation they will do. They will only pick up the previous examination question. And here, November 20 RTP question, there is no exception for this. This also, my dear soldiers, they have taken the previous examination question. Now, APK Bank Limited received an application from pharma company for takeover of their outstanding term loan secured on its asset availed from an outstanding from a nationalized bank. APK Bank Limited requires you to make due diligence audit in the areas of assets of pharmaceutical, especially with reference to valuation aspect of assets. State what may be your areas of analysis in order to ensure that assets are not stated at overvalued amount. He's asking that whatever assets are there, it should not be stated in an overvalued amount. So he's asking whether any assets are overvalued. Assets. So this is a common repeated question. Overvalued assets, hidden liability, investigation on behalf of an incoming partner, investigation on behalf of a bank. These are all common and repeated questions which keep coming. Okay. So assets, my dear soldiers, overvalued assets, for example, assets may be fictitious in nature. Then assets which are like say under litigation. Then, my dear soldiers, also any investments which is having very low rate of return. So any investments which are having any low rate of return, then uncollectible receivables are unrealized debtors. So this is the thing actually. So past examination questions, we can manage this chapter, my dear soldiers. Nothing much, and even RTP question also reflects the same thing. 4 topics: bank audit, insurance, then due diligence, investigation, forensic audit, and last one is internal audit, management audit, operation audit. But mind you, forensic audit is a new topic, so it is only applicable for new syllabus, only new syllabus. So they may experiment here for some questions. And peer review. Peer review, simple, small topic, but peer review this time, they have asked this question. Selection of sample by a reviewer in case of peer review, brand new question. They'll ask what is peer review? Regulatory mechanism whereby to monitor the performance of professional as to quality of service to enhance the confidence of intended user for economic decision making. So peer review means work of one CA is checked by another CA. Then what is covered under peer review? What is scoped under peer review? What is descoped under peer review? What is professional standards, ethical standards, technical standards? In peer review, what happens? Work of one CA is checked by another CA. That is what we come across in case of a peer review. So I repeat again one more time. Work of one CA is checked by another CA. That is what we highlight as far as the peer review is concerned. So in peer review, 4 stages. One is empanelment of reviewer, very important question. Then planning, important. Execution, reporting. 4 stages are there. Empanelment of the reviewer, planning, execution, and reporting. Everything is important. So small chapter. Here, selection of sample. This is relating to the second stage of peer review. That is, my dear soldiers, planning. Planning. So what happens? The practice unit will send a questionnaire and list of assurance and attestation client. List of assurance and attestation client. the practice unit will send a questionnaire, list of assurance and attestation client to the reviewer. Then reviewer will select a sample. Mind you, in peer review, of course, I check the work of the other auditor, but understand one thing, we never use the word audit in the entire chapter. We often use the word assurance or attestation services. And assurance is another name for audit. Remember that. Entire peer review chapter, you will use only the word assurance or attestation services. Assurance is nothing but another name for audit. So that you remember that. So reviewer will select a sample. Then he will communicate the practice unit. He will tell that, okay, so practice unit will send these details in 15 days. Then, my dear soldiers, reviewer will also communicate that this is the sample he requires, and he'll give 15 days time, and total peer review should be completed within 90 days. The total time to be taken should be 90 days, and maximum the reviewer can spend 7 days. 7 days, my dear soldiers, they can spend at the for the purpose of the peer review. That's the thing. 7 days maximum they can spend. Okay, so this is the thing. So the answer is reflecting, my dear soldiers, as well as the selection of sample by the reviewer. Then classification of frauds by NBFC. NBFC is going to be a favorite topic for the examiner because NBFC has undergone amendment and changes. So NBFC, very small topic, please complete it. First of all, they may ask audit program for NBFC Investment Credit Company. NBFC Investment Credit Company, November 2019 RTP. They have asked this question. November 2019 RTP. May examination was cancelled. November they did not ask. So this time they may ask audit program for NBFC ICC. NBFC ICC means Investment Credit Company. To give you a background, there were three types of company: loan company, then investment company, asset finance company. They were all merged and created into NBFC ICC, especially old syllabus. If you're having a old material, please note this amendment. Please note this change. Audit program on NBFC ICC. Okay, is a thing. And focus on audit report. Audit report in case of NBFC. Audit report. NBFC accepting public deposit, not accepting public deposit. So audit report, my dear soldiers, you focus on that. Okay, that's the thing. And now another question, very favorite question of examiner, will be classification of fraud by NBFC. For example, there could be a forgery, there could be fraud, there could be reckless advancing, there could be giving credit facilities, unauthorized credit facilities are given, forgery of books and records are given, cash shortages less than 5,000, less than 10,000. So any kind of cash shortages less than 5,000, less than 10,000, those things are there. And also, my dear soldiers, foreign exchange, any issues related to foreign exchange. So those things you have to highlight here actually here. Okay. So classification of frauds in case of NBFC. This is also one of the favorite thing. NBFC sure short, a question will be there, and that too, audit program of NBFC ICC. That you please check an audit report and classification of frauds. In fact, one MCQ question they asked about provisioning for NBFC. Provisioning. What is a provisioning of NBFC? Provisioning of NBFC, like say they have standard asset, substandard asset, doubtful asset. Doubtful asset, like say 1 year, 1 to 3 years, more than 3 years. Then loss asset. What is a provisioning? They may ask. They may ask also, my dear soldiers, the difference between the division 2 and division 3 of schedule 3. I told you schedule 3 has got 3 parts. Division 2 is on Ind AS, division 3 is on NBFC. So NBFC is going to be a hot topic this time, definitely. And another new question which has come in NBFC, that is in May 2020 mock test paper. This is another new question they have given actually. Or this is a new question. Okay, they have not asked this question in the earlier exam. Brand new question. What they have given, Kammo and Company LLP, form of CA, was appointed as an auditor of NBFC. The audit work was completed. Now, the audit team which was involved in field work came across various observations in the course of audit of NBFC and also limited understanding about exceptions which are required to be reported in the audit report. This is very important. This they have never asked earlier. Exceptions which are required to be reported in the audit report. One NBFC ICC is a new question, and this one, exception reporting in the audit report. Exception reporting in the audit report, they have never asked any question. Okay, they have never asked any question on exception on audit report, so that they have not done it. So this is a brand new question. So this year also you have to focus. May 2020 mock test paper. They would like to understand in detail regarding the obligations on part of an auditor in respect of exceptions in his report so that they can conclude their work and briefly explain. Now, if it is a question, first of all, what are the exceptions? For example, any violation under chapter 3B of RBI Act. 3B of RBI Act means, for example, payment and settlement system. See, NBFC cannot do NEFT and RTGS. Is NEFT, RTGS has to be done by bank. And to give a background, NBFC is also known as a shadow bank. The problem in NBFC compared to bank has got payment and settlement system. NBFC does not have a payment and settlement system. Means what? Bank can print their own checkbook. They can print their own demand draft. NBFC are not like that. NBFC are not allowed to do so. Okay, that is a thing. Okay, are you getting it actually? So NBFC is not permitted to do so. That is one thing. So they cannot print their own checkbook. For example, Muthoot Finance checkbook, nothing. So any violation under Chapter 3B, then accept any violation under NBFC, acceptance of public deposit, acceptance of public deposits. So is there any violation under NBFC acceptance of public deposits? Then any violation under NBFC non-systematically important non-deposit taking company directions 2016. Then any violation under NBFC systematically important non-deposit taking company and deposit taking company directions 2016. Okay, if there are any violation, then you inform the bank, that is bank means RBI, about these violations. Okay, these are all nothing but the exceptions to be reported in case of NBFC. So Chapter 3B of RBI Act, NBFC acceptance of public deposit, NBFC non-systematically important non-deposit taking company direction 2016, NBFC systematically non-deposit taking company and deposit taking company direction 2016. This parameter you have to report it actually. Okay, that's the thing. Then next one, my dear soldiers, after NBFC, we have a question on risk-based audit. Risk-based audit, what are the areas covered under risk-based audit? In risk-based audit, my dear soldiers, first of all, it is already answer is given. First of all, you have to understand the auditee's operation and identify and prioritize the risk. In risk-based audit, we find out the risk. First, you have to identify the risk. Risk means problem. See, till 1980, we were doing 100% check. From 1980 to now till to 2020, we are doing risk-based audit. What is risk-based audit? Wherever the risk is more, you apply more audit procedures. Wherever the risk is less, you apply less audit procedure. That is called as the risk-based audit. Okay. So if you have first, you identify the risk. That is why you apply SA 315, identifying and assessing ROM. Okay. So first you identify and prioritize the risk. Second one, my dear soldiers, what is the residual risk? What is the risk which is left in the organization? And whether this residual risk can be reduced to an acceptably low level. Ultimately, risk means problem. You cannot solve all the problems in the organization. So can you reduce this risk to an acceptably low level? And finally, it goes into reporting. Okay. So risk-based audit is nothing but find out the problems. For example, inventory being stolen, our asset being overvalued, liability not recorded properly, transactions being omitted. These are all various risks in the organization. Okay. It's nothing big deal about it. Risk-based audit means find out the problem. Where you have more problem, you'll apply more audit procedures. That's what it is. Okay. Then another question is that what is the contents of audit plan? Very basic question. Content of audit plan. Audit plan contains two things. There are two types of audit procedures: risk assessment procedure and further audit procedure. See, that is why we have these standards. SA 315 deals with risk assessment procedure, and SA 330 deals with further audit procedures. Risk assessment procedure is applied to find out ROM, risk of material misstatement. Whereas further audit procedures are of two types: test of control and substantive procedures. And substantive procedures again of two types: test of detail and substantive analytical procedures. These are the audit procedures. So these audit procedures are covered in the planning. It is covered in the audit planning. Ultimately, audit planning will contain what audit procedures we should apply when we are doing the audit of the financial statement. Okay, this is contents of the audit plan. Then coming up to another important topic, that is audit of public sector undertaking. Now, public sector undertaking, you focus on, again repeated question, not much experimentation is done here. This is also like a bank audit. You have to focus on audit, comprehensive audit, which deals with economy, efficiency, and effectiveness of the public sector undertakings. Public sector undertaking, nothing but government company, government corporation like LIC, like General Insurance Corporation, like BHEL. Okay, so we are talking about government companies. Public sector undertaking is nothing but government company, but they will have different types of audit. First thing, you focus on comprehensive audit. Okay, this question is also related to comprehensive audit. Discuss the issues to be examined in the comprehensive audit, which is nothing but economy, efficiency, and effectiveness. See, comprehensive audit is always applicable to government companies, industries, for example, whether requisite rate of return is received, whether the budgeting is done, whether, my dear soldiers, expenditures, wastage is avoided, like that. So comprehensive audit revolves around this. Then you have performance audit, very important. Performance audit is also economy, efficiency, effectiveness, but it is only focusing on government schemes like Manrega, or like say, what you can say, like education, various government schemes, like for example, midday meal schemes. So it's government schemes. Whereas comprehensive audit is on the public sector undertaking, the government company. Then you have to focus on propriety audit. So these three areas are very important in the public sector undertaking audit actually, and their revolving is always around economy, efficiency, and effectiveness. Straight and direct question will be there, not much twisting. Here also they ask comprehensive audit. The answer for this is here. Mainly, if you see the points, it is only revolving around economy, efficiency, but it is related to the government company or government corporation. But when we talk about, like, say, another question on PSU, it is focusing on performance audit. If you see the last line, what are the issues which are addressed in performance audit? Performance audit actually. So please highlight actually performance audit. I told you performance audit is economy, efficiency, effectiveness of government schemes and government programs. Okay, so it will revolve around that. So how these schemes are carried out. So we highlight about economy. So here on the top you can see economy, efficiency, and effectiveness. So the same thing is highlighted here. Economy, you ensure that you pay less, acquire more. Efficiency, no much wastage is there. And effectiveness, whether purpose of government programs and schemes is achieved. Okay, so PSU audit is revolving around these three topics only. Any other previous examination question, you read it. Okay, so PSU audit similar like a bank audit: comprehensive audit, performance audit, and proprietary audit. Okay, fine, we move ahead actually. Then another important topic which is there is audit of consolidated financial statement. See, there are topics in audit like CFS, like corporate governance, like peer review, quality review. These are certain topics, my dear soldiers: peer review, quality review. Then for new syllabus, audit under automated environment, Okay, then NBFC, then PSU. So these public sector undertakings. So I repeat again: consolidated financial statement, corporate governance, peer review, quality review. Then, my dear soldiers, audit under automated environment, NBFC, PSU, and also liability of auditor. These are all chapters, small chapters, but very high rate of return. Almost 20 to 25 marks will come from these chapters. Why are you missing out this chapter, or why are you skipping this chapter? Don't skip it. I repeat: audit of consolidated financial statement, corporate governance, peer review, quality review for only for new syllabus, liability of auditor, then audit under automated environment. In case of old syllabus, it is EDP audit, NBFC audit, and PSU. These chapters alone will fetch you 20 to 25 marks. Why are we missing out? So simply we'll break our head, keep on reading bank audit, bank audit. I don't say don't read bank audit, but sir, this what effort you put for bank audit and insurance. If you finish this chapter, why don't we get? So focus on return on investment. Read less, getting more marks. Okay, so consolidated financial statement, small chapter, very small chapter altogether. They'll ask question on reporting. Now, this is also a question on reporting, my dear soldiers. Reporting if the parent auditor is also auditor of component, and reporting where the parent auditor is not auditor of component. Okay, so they will ask question on reporting. That is one thing. They'll ask question on applicability, whether CFS should be prepared or not, applicability, and they will ask question on permanent consolidation adjustment, then current period consolidation adjustment. So what are the different adjustments? Current permanent consolidation adjustment is done only once, first time when CFS is prepared, and current period consolidation adjustment is done every year. Every year it is done where the CFS is being prepared. Okay, so these adjustments are done every year when the CFS is prepared. Okay, that's the thing. So you have permanent consolidation adjustment and current period consolidation adjustment. This question also, if you see, you are appointed as a auditor of Azad Limited, a listed company which is a main supplier for USA building and construction market. The turnover is 1.6 billion. Company operates 9 business units and has really 135 branches across the countries. As an auditor, how will you draft a report when parent auditor is also an auditor of all components, and when parent auditor is not an auditor of all the components? If he is an auditor of all the components, parent auditor has to check what? Whether consolidated balance sheet, whether consolidated P&L, whether consolidated cash flow statement are showing true and fair view. Nothing. But if he's not an auditor of all the component, then he has to use the work of another auditor under SA 600. So you have to give reference to SA 600 using the work of another auditor, and also give reference under SA 706. That is other matter paragraph under SA 706. So that is what the answer you have to highlight. Okay, fine. So this is a earlier it was asked in a question under RTP question, but May 2020 mock test paper mainly focus on reporting, permanent consolidation adjustment, current period consolidation adjustment, and whether CFS is applicable or not. So very small chapter altogether, but don't neglect it. Okay, that's the thing. My dear soldiers, we will take a break of 5 minutes, and once we come back, my dear soldiers, we will take up the questions which are related to professional ethics. So take a break of what, my dear soldiers? 5 minutes, my dear. So 5 minutes break will take up. Yes.
Vikas sir?
Yes, tell me.
Yeah. So, still how much time it may take, sir? So now only professional ethics is pending, right?
Yeah, correct.
Okay.
Okay. Another 30 minutes actually. I'll wind up. 30 minutes I'll take.
Okay. So actually we had announced for 5 to 7. So and you are covering in depth. So how to proceed like that? I just wanted to check. So another half an hour it may conclude.
30 minutes we can complete it actually.
Okay. So before we start into professional ethics, just a couple of queries are there for students.
It's better that I cover everything. It will be better actually.
Okay.
So that at the end I'll take all the queries. I apologize to the students. Let me cover everything. That will be better actually. So that they'll have a complete picture of it. I'll take up the question. Shivani, Vimlesh, they have raised the question. We'll definitely take it up.
Sir.
I'll take another 30 minutes and then we'll wind up. We'll just close this.
Sure. No problem, sir. You can complete, sir.
Okay. Coming up to the area of professional ethics, let me just highlight the important clauses. Anyway, this slide I'm going to send it to you so you can go through those questions. So if it is a first schedule, in first schedule, you have part 1, part 2, part 3, and part 4. Okay. You have these different parts are there, part 1, part 2, part 3, and part 4 actually. So part 1 basically they're applicable to CA in practice. So you focus on clause 2, clause 6, actually clause 6 to 12 entire you can focus, but these are the clauses you have to give high weightage, and clause 6 is very important clause. When it comes to part 2, just go through once. Part 3 also go through once. And part 4, my dear soldiers, again. So all these clauses you go through. But in first schedule, 2 and then 6 to 12 are very important. First, you complete these clauses and then go rush through the other clauses. Don't do any selective study, but give more weightage on these clauses. When it comes to second schedule, my dear soldiers, part 1, the clause number 1 to the part 1, it has got part 1, part 2, and part 3. Okay, part 1, part 2, and part 3. So clause number 1 to 7 is very much important actually. So there your focus should be there, 1 to 7 in the initial. Rather, you can take it 1 to 8, and then clause number 10 is important, 1 to 8 and clause number 10. And part 2, my dear soldiers, the clause 1 is very much important. In part 2, clause 1 is very much important. So these are the important clauses you should go through. And you should go through important section like section 21, which talks about other misconduct, and section 27, which talks about the branch office. Then you should also go through council general guidelines of 2008. So Council General Guidelines of 2008 basically it covers the what you can say, like say the various guidelines are there, as well as the Council General Guidelines of 2008 are there. So when I say Council General Guidelines of 2008, this, my dear soldiers, there are some chapters, like 11 chapters are there. So, but please go through the chapter number 4. So chapter number 4 to chapter number 10. 4 to 10 is very much important. So chapter 4 to chapter 10 is very much important. Okay. That is what you have to do in the professional ethics. Okay. That's the thing. So I hope you're clear with this. These question answers are there. A lot of questions are there. You can go through when I send you this PPT for your reference actually. Now, amendments, network and network forms. Now, what is a network and a network form? A network basically understand that this concept was mooted by council, and we should be really happy with the decision taken by council. Council, they said that the small firms, if they want to compete with the big firms, so they can get into what come on a network. Example, suppose say there'll be a person who comes to me and he tells that, okay, I want you to do audit pan India basis. I have 30 branches across India, but I have an office only in Bangalore and I don't have any branches across India. So I need to send people throughout India, which is a costly affair. Second thing, it consumes a lot of time and resources gets blocked. So these kind of issues comes into picture. That is why what happens, small firms, they all come together and they create a network firm. See, for example, there'll be a person called Ram sitting in Delhi. There'll be a person called Sham sitting in, say, Mumbai. And there'll be a person, say, for example, Vikas Oswal, myself, I'll be sitting at Bangalore. And uh, so Ram, Sham, Vikas Oswal, and say, for example, there'll be, say, Kishore, there'll be a person sitting in Calcutta. So what happens? We are all practicing separately. And now what happens when a large client approaches us? We cannot compete with them. In fact, one CA was telling that all listed company audits are going to Big Four, PwC, Deloitte, KPMG, EY. It's going to them. Nothing wrong with that. They have a very large bandwidth. Each MNC, these audit firms, they have more than 5,000 chartered accountants working under their role. They have that kind of, like say, people working under them. When they have that kind of people working under them, what is happening, my dear soldiers? These people can take up all large audits. But what about us? So council took a very constructive decision, mainly to compete with Big Four, to dream big. They got the concept of network. Okay, they brought the concept of network, and that is what we understand by the network. Actually, network are nothing but they are large structure for cooperation, for profit sharing, for cost sharing, and my resource sharing. We all come together. See, for example, I have some work in Delhi. I don't have to go to Delhi and do the work. I'll call Ram. I'll tell Ram, see, you please take care of it actually. So I'll just call up Ram. I'll call up Sham in Mumbai. So that these are all connections. You call it as more like a connections. So today, most powerful intangible asset a person can have is network. For example, if I want to go to Tirupati Devasthanam, if I know somebody there, I can get a darshan very easily. So that is all about what come on network, my dear soldiers. That is a connections, my dear soldiers. That's the thing. So it is we are using intangible assets. One CA called me from Kerala. He had some work in Bangalore. I helped him to complete the work. He was very, very happy. Cost saving was there. See, unnecessary his person will come, stay, hotel, all those things, issues will be there. So that's okay, sir. You handle and we can share the fees. That's it. So that is what we have to understand about network. Mainly to take charge with the Big Four they brought in. So they are large structures. They are meant for cooperation and profit sharing, cost sharing. Common ownership can also be there. Control or management can also be there. There'll be a common quality control policies and procedures and common business strategy. And they use a common brand name. They are using a common brand name. And also, they can also share what come on significant professional resources. Professional resources means like people in the organization, or they can share systems, they can share software. Don't think resources means only people. It could be system, it could be software, it could be audit methodology. So that is what we have to understand about network. So and understand that mainly it is taken care to take on the big firms. That's the thing. Okay, that is the meaning of the network firm. Now network firm, so like Ram's company in Delhi, Sham's company in Mumbai, they all come under the network firm and we are all part of it. Are we partners? No, we are not partners. We are all separately practicing. But if any large chunk of audit comes, we just take resources from each other's firm and we share the resources and we do the work. That is called as network. Okay, that's the thing. So, for example, network is created to enhance ability to provide the professional services. Is network created to enhance the ability to provide professional services? Yes, sir. Correct, sir. Yes. I have created network to enhance my ability to provide professional services. Then, my dear soldiers, suppose say a network is created, a larger structure is created only for referral of work. Ram will call me from Delhi. If you have any work in Delhi, you tell me. If I have any work in Bangalore, we will refer the work to each other. We'll share the fees. That is not a network. Try to understand. That cannot be a network. Merely we are referring the work to each other. That cannot be considered as a network. Network. Some of the multiple conditions should be satisfied. If not all, some of the major conditions should be satisfied. Look at the next one. Large structure aimed at cooperation and firm share common brand name, common system of quality control and professional resources. They share common brand name, common system of quality control, professional resources. Can I call this as a network? Yes, this can also be considered as a network, my dear soldiers. So if majority of the conditions are satisfied, you can consider as a network. Merely what you can say, referring the work, that cannot be a network. So always, what is a network? It depends upon facts and circumstances of the case, and it purely depends upon the judgment. Now look at the thing. Whether larger structure aimed at cooperation and clearly aimed for profit and cost sharing among the entity. For example, I will take an office in Calcutta, or I'll take an office in, say, Indore, and we all four CA, Ram, Sham, and other CAs, we all CAs, we share the cost actually. So cost sharing, yes, it can be for a cost sharing, or it can be for a profit sharing. So this can also be a network. Okay, that's the thing. But my dear soldiers, that's the thing. But cost, if it is a immaterial cost, then it cannot be a network. So there should be a substantial material cost that should be involved. Okay. Now network could be what? It could be either a mutual entity, mutual benefit entity, that is like an association of a person. Network could be a partnership firm. Network could be an LLP, and network could be a company. I repeat again one more time. It could be a mutual benefit entity, that is association of person. It could be a partnership firm. It could be a my dear soldiers, it could be a LLP, it could be a company. So you can create network in four different manners. Okay, either AOP, that is mutual benefit firm, for partnership firm, LLP. So that is the thing actually here. So that's the thing. So it can be, as I told you, it is a mutual entity. Mutual entity means AOP. Or it could be even a partnership firm, definitely, no doubt about it. It could be even LLP, and network firm can also be a company, no problem. But company should be registered as per, like a management consultancy company, as per the requirement of ICI. That should be strictly complying with the requirement of ICI when you are creating a network. So we all come together, we may create any of these entities to start a network, like management consultancy services. Okay, that's the thing. Now, can I join a multiple network? For example, I have a network with, say, Ram and Sham. Now, can I have a network with some other person? So I join some 5, 6 network. Answer is no. One CA should join one network. That's it. I repeat again, one CA should join one network. Okay. If there are partners and partners will join multiple network, that is also not permissible. You can be a part only of one network. The network should be registered. That network has to be registered. That's the thing. The network, what happens to register? First of all, apply for name. Any network, the name will have a word called affiliates. Remember, the name will contain the words called affiliates. Affiliates is the word that is used. So any network, my dear soldiers, will have a word called the affiliates. That's the things, affiliates. So it will not be and company. Like, for example, Vikas Oswal and company, or Vikas Oswal and associates. No. So because what happens, it will create a confusion. If with other partnership firm or with the other audit firms, they say every network will have a name called affiliates. You have to apply Form A with the ICI. ICI will approve the name. And then, my dear soldiers, within 30 days, you should register the network in form number B. Okay, that's the thing. And if it is network outside India, then form number D is the thing. Like, for example, it could be an international network for that matter. The word what we use, my dear soldiers, is affiliates. That's the thing. That is what you have to understand about the network. Okay, that's the thing. So this is all what I've highlighted. So as I told you, you have to register with the ICI, and I told you that you have to use the word affiliates. A word name affiliates should come, and you are filing a form number A for registering a network. Remember that form number A is used. That you can't use these names, like for example, and company and associates. No, it should only have what come on the word called affiliates in its name. Okay, that is one thing as far as the network is concerned. Okay, so apply for name availability. Name is available, 3 months time is there. So what happens, my dear soldiers, Within that, you have to register the network and get it done. Actually, registration should be done. Okay, that's the thing. Okay, I was telling you that if you share any immaterial cost, it cannot be considered as a network. That will not be known as a network actually here. Okay, so the cost sharing could be like, say, come on, let us develop audit methodology. Let us develop some training courses. Let us do weekend training among our firms. So merely some immaterial cost, if you're sharing, that is not a network. Definitely, it will not be considered as a network. For example, let's say, let us have a common audit methodology. No, it is not a network. There should be cooperation, coordination, resource sharing. If one or two conditions are satisfied, it cannot be considered as a network. And cost which you are sharing should be a material cost. That's the thing. Then there is also what come on management of network. There should be a managing committee. From each firm, there'll be one person nominated as a part of managing committee. They will contribute some money to the network and they will administer the network. For example, development of new software, development of training of resources. So new things actually, like say seeking, so various things actually, training the employees. So these kind of activities are taken care by a common admin pool. See, I will contribute 10,000. Ram will contribute 10,000, then Sham will contribute 10,000. So we'll all contribute to administer the network. Network form should be run that way. Okay. So rest all things you can manage it actually. So I've given you the brief glimpse of network. So which is a latest amendment which has happened, my dear soldiers, as far as the thing is concerned. So I'll send you this PPT. You can use this PPT, my dear soldiers, for any additional reference question on the what you can say on professional ethics and so on. Now, my dear soldiers, I will take up the questions of the students actually. Let me take up any questions they are having. So I'll address those questions actually here. That's the thing. First of all, I am getting a question which is coming from Vimalesh. Vimalesh is asking a question. Hi, sir. For inventory at third-party location, can we give reference to CARO 2016 clause 2? Yes, Vimalesh, you can do that. You can give reference to the inventory at third-party location. You can also give reference to CARO 2016. No problem. There's no issue with that. Actually, that will add more weightage to your answer, Vimalesh. So it can be done. You give reference to 501. That is one thing. Then also your physical count of inventory clause 2, that also you can give reference. So that can be done. Okay, good, Vimlesh, it can be done. Next question, my dear soldiers. Vimlesh is asking a question. Sir, in this question, since accountant of AGM has requested not to send balance confirmation, is this indicate limitation of the scope of audit? So Vimlesh, we were discussing about a external confirmation question where what has happened, the case is pending in the court. That is why client has requested that, sir, please don't obtain confirmation from these kind of clients. So it will not be treated as a limitation on the work, Vimlesh, because there is a strong reason. There is a disagreement between our client and the third party. That is why the matter is in the court. So there is no issue here. It cannot be treated. What you should do, you should obtain evidence. You should ask them, okay, give me the court documents, give me the correspondence with the lawyer, and also have a discussion with the lawyer, take the minutes of the meeting. So once you prove that there is a conflict, there is a disagreement, then I don't think that we need to focus on limitation on the work. Okay, of course, what your thought is correct. That is it creating a limitation of the scope? The answer here is no. As long as we have an evidence in our hand, it is not treated as a limitation on the scope actually. Okay, that's the thing. And next one, Shivani is asking a question. uh, Tiwari has asked some question, but we are not able to link it. Tiwari, if you can be more detailed, I can answer your question, Tiwari. The question from Shivani is that, sir, there was an MCQ on direct reporting engagement in relation to PSU. Can you please explain such an engagement is? See, direct reporting engagement is a question related to public sector undertaking. There are two types of audit engagement: attestation engagement and direct reporting engagement. In direct reporting engagement, what happens? The subject matter is matched with the criteria. I repeat, the subject matter is matched with the criteria. Whether the subject matter is matching with the criteria. Sir, what is subject matter? Subject matter is nothing but financial statement. Criteria is nothing but AFRF, financial reporting framework. So whether the subject matter, that is a financial statement, is it matching with the criteria? That is what you have to highlight it actually here. So that is called as what it is termed as what the direct reporting engagement. So under PSU, there are two types of engagement. One is attestation engagement, whereby you compare the subject matter with the criteria, you draw a conclusion, you give your opinion. But here you just compare the subject matter with the criteria. Subject matter means financial statement, criteria means applicable financial reporting framework. Okay, Shivani, I hope you are clear with your doubt, ma. Are you clear? Okay. Next question: how do we receive PPT? I think I have to talk to the Sikasa people. They will definitely arrange to get the PPT for you. Yes.
Yes, sir. So you answered almost all the questions. Thank you so much for your time, sir. And it was indeed a very wonderful session covering all the aspects of CA final syllabus and covering May RTP as well as November RTP and also MTP questions also. And on behalf of Sikasa Bengaluru and Bangalore branch, I wholeheartedly thank you for your valuable time, sir.
Thank you very much. First of all, sorry Chaitanya and Panindra, you guys had to wait for me, but I'm very, very sorry actually. But
Yeah,
thank you
no
for giving me
problem,
the
sir.
opportunity. Huh?
No problem, sir.
Oh,
And
kind of
actually, a
you,
couple
kind
of
of.
announcement before we conclude the session. So you were asking about MTP, sir. So from 10th of October, MTP is released. So it will be for 1 week, 8 days. So please make use of this opportunity, and then all the students come out with flying colors. And also one more announcement: like today is the last date for changing exams city due to COVID. If you wanted to change the exam city, you can make use of it. And today is the last date till 11:59 p.m. It will be available. And I will just quickly call upon Chaitanya to give his feedback about today's session, sir.
Yes, sir, session was very nice, sir. Even though we have extended the time also, but sir has covered all the topics very detailedly, and the explanation was very nice, sir. To the depth of the concept we have went, and we have covered even last year RTP everything also, sir. Thank you very much for sharing your time and your knowledge, sir. Thank you very much.
Thank you, Sai Chaitanya. Thank you, Panindra. Thanks a lot actually for this opportunity.
Thank you so much, sir.